Good morning, everyone, and thank you for joining us here for our annual Specialist Risk Review event. My name is Nontutsuko Mhlungu, and I will be your host today. So if you have previously attended our previous annual risk review event, you will know that we normally have it in May. Last year, we hosted 3 big events in Johannesburg, Cape Town, and Durban. But this year was markedly different, as you know, and we had to make a call as a business as to whether we were going to continue this year with the survey or push it out to next year. Of course, we decided to push through, and we are glad we did. The technology, as you know, has been an amazing enabler, and in fact, it's the reason why we were able to continue with our event this year. We have now, with these virtual events, we're able to reach far more people and reach a wider audience with one event than we ever did with those 3 big events combined. So this has certainly been a big plus for us. All right, so just a little bit of a background around the annual specialist risk review. We launched it formally in 2018. These were our humble beginnings. It was well received by the market, and we've only grown from strength to strength ever since. It's gotten better with each year. Why do we do this? Why do we compile the survey? Why do we have these events? Well, the answer to that is probably very similar to why you have joined us today. We as SHA want to share our insights. We want to share our knowledge. We want to analyze industry trends and the evolving risk landscape, which no doubt has changed over the last couple of months. And in an industry that is commonly perceived as a grudge purchase, and one that's not always preceded by the best reputation, we as SHA want to be transparent. We want to share our wealth of expertise. We turned 35 this year, some of you may know, so this is a big milestone for us. So it is very important for us to do this and to continue to share these insights, and it's the reason why we will continue to do so in future. So that's just a little bit of a background for you about why we do this. Some announcements for you to take note of. This event has been accredited for 2 CPD hours, so do stick around for the full event. We are monitoring your online presence. You can expect to receive your certificates during the course of next week. And then secondly, and you might be pleased to know, everybody who registered for the event was automatically entered into a draw to win a UPS, so an uninterrupted power system, which will surely come in handy during load shedding. So do stick around to find out if you are the lucky winner. All right, so that is all of the announcements. It has been a tough year, admittedly, for all of us. But today we really just want you to sit back, relax, and enjoy the content that we have put together for you. So the agenda that we have got today, it should come up on your screen shortly. We will have the executive head of Santam, Quentin Matthew, who will be giving a brief business update. He will be followed by SHA CEO Gareth Beaver, who will basically set the scene for the survey and give a brief chat on the introduction. And thereafter, Simon Colman will chat to the respective business heads, where he will unpack the survey results. And after that, and last but certainly not least, we will have a best-selling author and international speaker, Justin Cohen, who will chat to us about the vaccine for the mind. So as you can hear, we've got plenty in store. It is going to be an amazing program, so do stick around. But for now, and without further ado, here is Quentin Matthew.
Good morning, all, and thank you, Nani. Thank you, Gareth and Simon and the team for putting this together. And as Gareth said to me, Connie, there's no free lunch, particularly at this time of the year. Even though I know all of us are starting to get ready for the end of the year, I think the challenges that we've had for the year and the topic around the annual risk review that SHA conducts every year is certainly very appropriate. So allow me to take a few minutes of your time just to sort of set some background, and really I've equally will context my my discussion with you. I just want to bring my presentation up. I'll just get that onto slideshow. So my topic that I'll spend a few minutes with you on is in terms of insurance in a changing world, and a changing world certainly it has been. In terms of my agenda points, I'll go through really some brief slides. But before I get into it, I just wanted to first talk around, and when we talk about a changing world, I wanted to just share with you that we're really pleased to announce that from 1 January next year, SHA will change from being operating as a 100% subsidiary within the Santam Group to that of a division. I'm sure some of you have heard of that up until now, and there's been some rumors around it. But key to that is that we will retain the SHA brand whilst converting and changing the business from a UMA. The decision to divisionalize SHA was based on a few factors, some of them being around costs and synergy savings. And of course, that's critically important at this time, as well as addressing and streamlining some of the compliance and regulatory requirements that are applicable to underwriting managers. The move will also contribute further to our objective of consistent and seamless client and intermediary experience across all touch points within the Santam specialist business cluster. I think central to the change, and we've at length gone to ensure that the success that SHA has had over the past 35 years and the culture of entrepreneurship and really the agility of the business, which was held by and started by the founders of SHA and continued by the management team, we will ensure that we continue to harness and to nurture that. And that's something that we hold dear, to ensure that we keep and maintain and build our leadership position that SHA has in the liability market. So I think all in all, what you can expect is the continued innovation and agility of SHA. And for all intents and purposes, there should be no change in terms of the divisionalization of SHA. If I move on and allow me just to share with you and to grab some opportunity to share with you around Santam strategies and what we look to do in the next few years, particularly as we have spent some time really building our what we call our Future Fit 2025 strategy, and that's around extending our leadership position where we have both in South Africa and abroad. And key for us, if we just go back in terms of positioning that, some 5 years ago, we had a leadership position of around some 22%. And that market share has gained steadily over the 5 years. And we now sit with a market share of around about some 24.5%. So certainly some building blocks there, and we continue to have a strategy of expanding that. I think Noni commented on what is so important from an insurance point of view is building trust with our clients, and particularly at this time where we're dealing with a lot of media attention around infectious disease claims, etc. It's not the only issues. Building on trust is something that's critical to Santam, and our insurance good and proper strategy and brand positioning is certainly paramount, and you'll see I'll comment on that a little bit later. We're also going to spend a lot of time working on our client experience and making sure that we're up our game on that. We're continuing to focus at this time, whilst costs are central to everyone, and making sure that we really manage in our business tightly. At the same time, we need to ensure that we build resilient societies, and that it's not just about looking at our claims and management spend and building our business that's in front of us, but also the reach that we have and the responsibility that we have to South Africa, and ensure that we lift up the societies around us, and that we build the insurance pool, not only in terms of the current capabilities or the current clients that we hunt and we swap between all of us, but that we also build and lift the entire capability for insurance and for individuals in South Africa. As part of Santam's strategy, we continue to diversify and build our international and African footprint. And of course, we don't get to the position and our capability without ensuring that we believe that we have the best people and ensuring that we've got a culture that supports that capability. I think key is around technology. We continue to invest more, optimizing our financial performance. And I know for a lot of you on the line, our intermediaries, that ensuring that our intermediary experience and enablement is key, that it's easier to do business with us. And you've seen a lot of innovation coming from SHA in that regard with things like the pocket underwriter, but it doesn't just stop there. But I think the whole focus around digital innovation is key in a strategy and in a more competitive world going forward. So if I move on in terms of emerging and transforming risks and how that landscape is certainly unfolding. Oh, sorry, I pressed the wrong button. I want to start off by starting on at the top of the slide in terms of the change in business environment and the business models that have changed. I think the days where clients only engaged, via a paper system, has, for instance, been one of the models that have changed, and the whole digitization, the whole omni-channel approach, where clients have varying engagements with the insurers and intermediaries where they grasp and get that information. I've recently seen in the media that, for instance, Amazon has partnered in India to start an insurance business. And I think what we can expect is that business models in terms of competitors and who they are and where they come from will challenge us. They're not necessarily the direct competitors that we see in front of us every day. So very conscious to our strategy and how we look at our risk models is that insurance requirements, be they through user-based insurance or be they through partnerships and new mechanisms, I think we will see more and more of that. The regulatory risks that we face, I think I may be stating the obvious, but some of that, just in terms of Africa, for instance, we see more indigenization, or talk in another sense, almost a nationalization approach where there's compulsory sessions, etc., that are required. And one really needs to work and make sure that from a stakeholder development point of view, that we really working with governments and financials and the financial sector authorities in each of these countries to make sure that they understand what we're doing and that the role that we play. The rising debt bubble, it is more like a bubble, is certainly one that we're all aware of. I think the challenge for us as South Africans is going to be around, so how do we fund this debt bubble? And I think we're all going to have to play a role. The government is going to have to collect more revenue to be able to reduce the debt, not only in South Africa once again, but across the world. So not to go through all of the points that are necessary raised there, just the evolving social and demographic trends. A comment there on the right-hand side of the slide around the silver tsunami is certainly one that speaks around, for instance, the aging workforce and the aging population. And what does that mean to our risk landscape, as we have to make sure that we provide for that aging population. A new terminology that certainly we picked up. I think technological advancements go hand in hand with the comments that certainly have been made. Things like cyber risk automation around in the business, for instance. Within Santam, we have more robotic processes now, numerous robotic processes that are certainly increasing our efficiency and capability and making sure that that from an error rate point of view, that we can do jobs through our robotic processes that used to take us days in terms of individuals, that literally now take us minutes or hours. And those sort of processes are allowing the people that did that types of roles before to now focus and be retrained on more complex roles going forward. I think disruptive in environmental patterns, the frequency of natural disasters, renewable energy risks, environmental liability issues, micro pollutants, all things that we need to take into account now when we underwrite and understand risk. The fact that there's more plastics in the ocean, that's been well documented, and how that flows into the food chain and how that affects liability exposures or exposures that need to be taken into account by our clients and insureds, and how do we manage that from an advisory point of view to our clients, both from an intermediary point of view as well as an insurer. Last but not least, I think issues around behavioral health, obesity in society, things like high blood pressure, increased heart disease, and dare I say the infectious disease issues that have been uncovered and that we are dealing with at present are going to become more prevalent going forward. Just on that point, yeah, I'm sure we've all had some reflection in terms of saying to ourselves when trying to understand the risk landscape, why is it or how is it that we weren't able to sort of foresee where we are today, and particularly from an advisory point of view. And I think those are questions we need to sort of mull over, is around what's next. Things like bird flu, SARS virus, and other pandemics have been around certainly for the past few years and decades. So it's not that new. Right, but this pandemic is different that we're dealing with, and I think with having a risk review, it would be remiss of me not to comment, at least to some degree, in terms of what can be done and what are what insurance principles are relevant or irrelevant, and whether that comes from the public or private sector perspective. So I think firstly, I'd like to comment that from a humanitarian and economic perspective, certainly the losses per se have been extreme. We've seen a number of deaths. I think the deaths around the world are somewhere around 1.6 million people, and in South Africa, you've seen the statistics. And whether it's just through death or whether it's through loss of productivity, the humanitarian loss that the economy has suffered and the loss of jobs has certainly been something that's unprecedented and that we're having to manage. Somebody made a comment the other day in one of the sessions I was sitting to say that the 1 in 100 or 1 in 200 event that we believe comes around, well, guess what? We live in that 1 in 100 or 200 year event, and it's really challenging us as individuals and challenging us as risk carriers and risk management and advisors in terms of how we understand risk. The financial losses that we expect both in South Africa and I think abroad is far-reaching. The numbers are in the tens of billions, and certainly the expectation that would be that the insurance industry is not one that can carry all of those losses. And you would have seen some of the reporting that's come out both from reinsurers globally as well as from Santam, that the reserves that have been raised, and we will see that some of that impact is going to be carried by the insurance industry, but it cannot be carried in totality. So society's preparedness and resilience to systemic risks, and the pandemic is certainly a systemic risk, is going to need to be reviewed, and that the status quo and how we manage and understand risk going forward will require a relook. So how is excuse me for a second. So how's the insurance industry responded? And the response I've focused mostly on is from a Santam point of view, but it's not restricted to Santam. And then there's been relief from Santam and some the rest of the industry, but we committed to more than R1 billion in relief efforts that we paid to clients as some contribution to losses that may or may not be covered, particularly in terms of the CBI extensions. There's been a contribution that we've made to solidarity funds, hundreds of millions. And we've also been needing to look at how to adapt to customers' changing needs. As an example, the fact that many insured travel less, and we've been able to come up with new products to be able to adjust to that. Once again, I think that's been both an industry response that have responded reasonably quickly to some of the events that have, and the challenges that have been put before them, and designing cover for future systemic risks, such as what we have in front of us now, particularly with regard to infectious disease, is going to be more challenging, and we're going to have to look at how we address some of these gaps going forward. As for all intent and purposes, the risks that we see in front of us are not covered by the traditional insurance means. So how does the insurance industry respond to systemic risks? And as I move towards the end of my discussion, I think that it will be around building greater resilience. And if I look at it in two key aspects around pandemics, it will require that we need more collaboration, and collaboration will be between government as well as public-private partnerships. We'll need to look at risk pooling mechanisms between insurers around what capacity can be made available to things like pandemics. The extent of cover, as I've mentioned before, or the extent of liability is not sustainable in terms of the frequency of pandemics that could be forecasted, and the impact of 1 in 100 or 1 in 200 event that we're sitting with at present. So I think what you can anticipate is that there will be some product development, and there will be some collaboration between parties, such as the likes of working with government institutions like SASRIA, SAHIA, the FIA, around trying to find solutions that are sustainable and can give some sort of risk management solutions to clients, subject to certain conditions. So I think what you could also expect is that we will need to do some more work on contract certainty. Some of the judgments that are coming out in the higher courts at the moment, both locally and abroad, are certainly counter to the intention of underwriters in terms of the extent that's been covered. And I'm really talking there around property damage or business interruption sections, but it really speaks around the wider risk landscape. I think the same can be said for climate change. The increasing climate change speaks to the fact of working with governments. I think globally there's been some very good examples around public-private partnerships, pools such as Flood-Re, Pool-Re in the UK and in Europe have certainly been very good examples that have been able to give sustainable solutions to clients looking to provide or to require cover. So certainly we're dealing with a very fluid and changing risk environment, and against that background and discussion, I think it sets the scene for the survey and that SHA have undertaken, and for that feedback which the team will give you. So if I can just, in closing, say thank you to everybody on the line. Thank you for the support you've given to Santam and SHA during the year, and particularly in the changing environment that we've had to all adapt to. May I wish you all the very best over the festive season, and good luck to my colleagues and to everybody on the line. Thank you.
Thank you for that very insightful update there, Quentin. Now, if you're at home or at the office and you missed it right at the beginning, SHA will become a division of Santam effective 1 January. We're really excited about this news, and now we will fully be under the Santam umbrella. All right, up next, we have got SHA CEO Gareth Beaver, who will be setting the scene for the survey and chatting us through the introduction. Gareth, over to you.
Cheers, Nonnie. Thank you very much, and a warm welcome to all our brokers out there today. Welcome to the 3rd edition of the SHA Annual Risk Survey. Somewhat of a a different format, but no doubt I'm sure you're going to enjoy the morning with us and that you're going to find it hugely valuable. We always intended that the purpose of this risk survey would be that it would serve as a practical and useful tool for you, our brokers, to have conversations with your clients when you're sitting down, advising them as to what's happening in the marketplace for the specialist risks that we underwrite, as well as regarding emerging risks and risk management ideas that would help your clients deal with minimizing their risk. And I have no doubt that our team has managed to deliver on that objective again. And I'm sure that once you see the report, you will agree. And all of this has culminated into today's event. I'd really like to thank the SHA team. In particular, just to note, Simon, Alicia, Nonny, and the team at MSL. You guys have worked tirelessly over the last 2 weeks to pull this together. It's always pressure. Doesn't matter how good your planning is and how long in advance you start. But so well done, guys, to bring this quality report to our brokers and all, as I say, culminating in today's event. Then to all our brokers out there, 2020 certainly has been a year that none of us are ever going to forget, I'm sure. Our world was thrown into disarray sometime in March this year, and it's just been a crazy, crazy year. However, we'd really like to thank you for your support and that of your loyal clients through this very difficult year. So thank you, guys. I think in addition to the challenges brought about by COVID-19 and the impact that has had on all of our working lives and the economy, as well as the health crisis, the casualty market has been in a very difficult space, as all of you, I'm sure, have experienced. And we've seen increases from, on the low end, 10 to 15%, going up to north of 300%, and as well as a significant reduction in available capacity to place accounts and to get them home. So we thank you for your patience. We know that when prices are going up at this rate, when capacity is shrinking, we know that it is very difficult for you guys to have those conversations with your clients. And many of your clients will be left feeling desperate and exasperated. So we really are hoping that today's insights will just aid and help you guys in having these difficult conversations. And I think with that, I'm going to just pull up my presentation. So give me a second here. Right. There we go. Okay, is it, just want to confirm from my colleagues, is the presentation up and running? Okay, good, thank you. All right. Okay, let's get into the, just gonna, all right, thank you. Okay, I've been with SHA now since the beginning of 2017, and yeah, I've learned a huge amount as to what's going on, in particular.
Sorry, Gareth, just Llewellyn here. Your screen was good to go, but okay. You changed the view. So if you can just, at the top, just say display settings and swap the view. Okay. Display settings, swap the view. Yes. Okay. Is it working? Just maybe close it and open it up again. It was perfect, and then something changed. All right, fine. So just end your screen share. Okay. Stop. And then just restart it for us. Sorry. Okay. Perfect. Yeah, it's good to go. Okay. All right, fine. Thank you. Okay. Right, so yes, as I picking up on that again. So 2017, I joined SHA, and I must say it's been quite an interesting learning curve and insight into, in particular, our casualty lines of business, and to just how difficult it is and how complex it is to kind of be on top of the pricing of this portfolio. I think whilst SHA has, over this 35-year period of time,
traded extremely profitably over the years, over many years. There's no doubt that we didn't factor in certain changes around us. There's been a change in the litigation habits of society. There's been a change in how the courts are interpreting contracts and how they are shifting towards favoring and almost putting aside contractual issues and looking at it from a consumer perspective. There's obviously a much greater amount of consumer awareness out there as to their rights, as to what's fair. And of course, consumers now have the power of social media on their side. There's also been, we've noticed, and we spoke about this last year, deteriorating risk environment, where we've seen the human capital risk index deteriorating over a number of years. And all of this has really severely and materially impacted on the loss ratio development. Okay. I've just got to, right. Whilst all of these changes and environmental factors around us have been changing, here's just a quick insight into, since 2015 and through to 2017, you can see across some of our portfolios where the premiums that have been charged by ourselves, which I think is a good and fair reflection of the market here in South Africa, you can see that contrary to risks which have been escalating, the environment which is having a greater impact on claims and claims inflation and frequency of claims, premiums had in fact during this period of time been decreasing, and in some areas decreasing significantly, which is a major wake-up call. And one of the issues that that we deal with as a casualty and long tail class of business is what we call the loss ratio development. And again, without trying to sound too technical, but in essence, it's the development pattern of instances or claims that initially get notified and take many, many years before the actual final liability for that claim is determined and crystallized. And we've typically seen in the casualty portfolio that really any incident that is initially reported to us only really starts to become apparent in terms of what it's going to cost at round about month 48, month 60, and then sometimes going as long as 10 years. So this makes it incredibly difficult to know where you are in terms of ultimate claims liabilities, and of course the impact thereon in terms of what you charge clients in this portfolio for premiums. Right, the first graph we're going to show with you, and again, guys, we've decided, and we at SHA, that we would very happy to be very transparent with you, our brokers and our clients. And so we really are unpacking some, in quite a bit of detail, some of the insights into our loss ratio performance across each class of business. And really, we think that by being transparent like this, as I say, it'll really help you guys to have discussions, quality discussions with the clients that you guys look after. But yeah, what we've done is we've tracked in the PI portfolio, the professional indemnity portfolio, we've tracked the loss ratio development for the 2008 underwriting year all the way through to 2016. So we've left 2017, 18, 19 out for now because, as I said, those years are still fairly relatively immature in the development of the claims tail. So really, this is what's been developing in the portfolio. And so what you can see there, if we just take the light blue line there, the first underwriting year, which goes back to 2008, and you can see just how that loss ratio develops, which is, as I say, indicative of the claims that are developing. So in the very first 12 months, the incurred amount is sort of, a couple of percentage points. And then you can see that light blue line, that the very first bar graph, and you can see how it moves from 12 months to 24 months to 36 48, and at month 60, which is 5 years down the line, it crosses a critical line for us, and this is our break-even line. So this is a gross loss ratio of 60%. We aim to run the portfolios, the casualty portfolios, at the top end 50%. Really, that's where we target, not more than 50%. Beyond 60%, we are starting to go into a loss situation. Just to explain the difference and why there's such a gap there between 60%. The balance is made up of brokerage, where we pay out 20%. We need around 15% to run our admin costs, and then reinsurance, XOL reinsurance costs of around 10%. So basically, that's where we set our break-even level at 60%. But for us to actually make a profit, we need to run it not more than 50%, and to service the risk capital that Santam invest in our business. So what this graph is, and what all of these lines have actually demonstrate, is that all of the underwriting years, 2008, 2010, 12, 13, and 14, have actually all crossed the break-even line as the years have developed. So you can see how this portfolio, in particular the professional indemnity side of things, has not performed well over this particular eight-year period. Now, the more recent years, so having a look at 2013, 2013 is still under the curve. I think 2014 and 2016, but again, there still might be some more development. But each year we'll keep updating these graphs, sharing them with you, and this will inform very much where the portfolio pricing is going and capacity. This is our liability, our general liability portfolio. It does look a bit more healthy. There's only one graph that has crossed that break-even line. I think one or two are getting close to it. A few of them have breached the sort of 50% level, you can see. And but this looks a little bit healthier. I just want to point out on the next slide, however, I've shared with you the 2017 here, 2018 and 2019 curves. But you can see here in 2017, we had one particular large loss in the food and beverage sector. And you can see that in that particular year, there was one very big loss, and that will affect the overall portfolio performance here and our pricing. So we are exposed in this class of business, as well as PI and financial lines, to single large losses and so it is extremely volatile. Then looking at the next graph is our financial lines here, our financial lines portfolio. This is the D&O, commercial crime, and crime and civil liability policies. Here you can see the impact in 2013 of one single massive large loss on this portfolio. So again, whilst they're under the 60% or many of the years, there are 2 years that have breached the 60% loss ratio. Again, this portfolio also has latency development issues in terms of claims. That big loss in 2013 underwriting year was only actually settled now in 2020, where we crystallize a full loss limit now 7 years after the actual incident. And then this is our single projects PI portfolio. Here again, you can see back in 2013, a massive spike going over 600%. We've had another year that's also breached the 60% level. So again, lots of volatility in this portfolio, where it's either feast or famine. And again, also a very long time. The 2013 claim that was settled this year, really again, only the actual liability will only crystallize during 2020 and was settled. Just to sum it all up, I've taken all of those years, 2008 to 2016. We've put all of those years into one cumulative loss ratio for each portfolio. And as you can see, this really, I think, paints the overall picture. So for PI, all 8 years added together has given us a combined loss ratio of 75%, which is excessive in terms of exceeding our target of about 50% and our break-even point of 60. Liability is in line with expectations. Again, next year we'll update that for the 2017 year, and so I'd expect that number to push up quite a bit. Financial lines, 64%, so above our break-even. Single projects well above at 86%, and overall, all of this in one class of business at 62%. So I think really, guys, this really tells the picture of a situation where casualty premiums over the last many years has really not kept up to date with what's been happening in terms of claims activity. And this really speaks to the resultant hardened market. I think we're not the only guys in the market that are hardening prices. And we've seen significant changes in the international markets, in particular London, where some of the prices and the reduction in capacity is even ahead of ourselves. And so just final share with you guys. I think this has been the SHA claims incurred number over the last 5 years, and you can see SHA and in particular 2020 has been quite a volatile year for claims incurred, where this year we will incur over R1 billion of claims in our portfolio. This is why we exist as an insurance company. We're there to jump in. This is when an insurance contract comes to life. This is where it becomes a tangible piece of paper and of tangible benefit to your clients. And so whilst sometimes a difficult pill to swallow as an insurance company, this is why we take premiums and invest those premiums wisely, and then we're there when your clients have an issue and need to claim. Just to finish off with, I'd really like to wish all you, our brokers, and your loved ones a blessed and safe festive season ahead. It would be remiss of me not to share with you my own journey over the last 2 weeks. About 10 days ago, I was diagnosed with COVID, and yeah, it's taken me quite by surprise. It's been a lot more nasty than I ever suspected. We attended a social gathering Saturday 2 weeks ago, and at least 50% of those individuals at that social gathering, contracted COVID within about 7 days. 2 of them are in hospital, and yeah, so it's been quite an eye opener for me. So I certainly underestimated the contagiousness and impact of this virus. So if that's anything to go by, I just thought I would share that with you as you go into the festive season. So please look after yourselves, give this virus some respect, and be safe. And that's all from my side. So back to the crew at SHA. Thank you.
Thank you very much, Gareth, for shedding some light and sharing those insights on the survey and just setting the scene for it, which Simon will discuss shortly. I also really loved that last slide about the long-term partnerships and collaborations between a broker, insurer, and a client in order to ensure a sustainable niche insurance space. It's very critical for our industry. All right, up next, we have got Simon Colman, who will be unpacking the survey results. He's going to be chatting in the session now. So take it away, Simon.
Simon Llewellyn here. Sorry, can you just quickly unmute yourself, please? No, we can't seem to hear you. Are you unmuted? Otherwise, just refresh your screen for us.
Hi, can you hear me now?
Yes, thank you so much.
Sorry about that. New pieces of technology playing havoc here. But I was just saying I'm honored to be doing this again with SA, and also very grateful to all of you, our brokers. And I know even some of our competitors have tuned in for the day. So welcome to you as well. I believe there's about 700 people watching right now, and no pressure on our panel. It falls on me, of course, to talk you through the various findings that come out of the survey. If we can just move on to the next, please. This year, we went a little bigger than we normally do. We spoke to almost 1,000 business owners, executives, and managers. And what we try and do with the survey is, in conjunction with the claims statistics that Gareth just mentioned in his presentation, we ask business owners and brokers in a variety of different industries what their thoughts are on issues that could give a rise to claims. We spent a lot of time talking about COVID and what the impact was on their operations and whether that actually changes their risk profile. So that really is where we're coming from. We believe that it gives us a solid base. It gives us a lot of information to talk about. At the end of the presentation, at the end of the segments today, which will be at around 1 o'clock, you'll be presented with a QR code where you can download the full report, which runs some 40 odd pages. So obviously we can't cover everything that's in the docs in the session today. We have relative segments. So yeah, if you've got questions, please don't hesitate to post them on the chat. We'll probably have to answer them offline a little bit later due to time constraints. With that, I'm joined at the moment by Manisha Chiman, who heads up our liability area. Welcome, Manisha.
Thanks, Simon, and thank you so much.
Pleasure. And I'm also joined by Anton Meyer, who heads up claims at SHA for his inputs. Welcome, Anton.
Thank you, Simon.
Okay, the next slide, please. All right, so off the back of the information that was given to us by Gareth, I thought it would be a good idea just to sort of break these down a little bit further by business unit. So what we're looking at here, when you look at this graph initially, it looks like we've had a significant dip from 2018 going into 2019, 37 odd percent. And I see brokers out there going, well, why are we increasing our premiums? Would you like to just give us a little bit of insight into that, Manisha?
Sure, Simon. So I think, while the incurred claims have decreased, we are seeing a volume increase in claims. The reality is people are becoming still more aware of their rights. And so they are still instituting claims. In addition, the claims cost, so the average claims cost has gone up, and Anton's going to unpack. I think, Anton, you can jump in here for me, but the average claim cost has gone up significantly. And so when you start looking at pricing and the average claims cost, you actually start seeing you have a disparity. The premiums that were charged in our soft market really doesn't meet the obligations of the claims. And that is where we are trying to get the premiums to move upwards, to try and have a sustainable pool of premium to meet claims.
Would you, sorry, Anton, maybe this is a question for you. Would you expect that 2019 year to for the losses to develop further, so that we, one of those slides Gareth showed a loss ratio in 2008 going from 10% until it matured eventually at about 120%. Is that something we would expect from 2017, 2018, 2019?
Simon, yes. Look, as Garrett mentioned earlier, this is a long tail business. And I think what we do need to understand is that, as investigations continue, we do realize that, we can't reserve up front. So what we do is, once we have the information in, that's putting the reserves in, and we start taking the claims as soon as they mature into the position where we can settle them. So I firmly believe that we will find that the 2019 year will further deteriorate over the next couple of years. And it's just, it's the very nature of the business we do. You could have a claim that looks absolutely defendable, and we defend the matter for 2 or 3 or 4 years, and then way at the end, on the courts of the steps of the court, we realize that there's something that we weren't aware of all the way through, and then of course it gets settled. The other issue is, of course, we reserve for the end during the period as well. So as the matter develops, obviously we start reserving and paying for legal costs. So all of that will start growing over the next years, and will probably only mature, again, in terms of our statistical analysis, probably only in the next 6 or 7 or 8. Of course, there's always that one matter that'll continue for, maybe even 10, 12 years. So yes, I definitely think that it will evolve further.
Okay, thank you. Can we move on to the next slide, please, guys? Okay, this is where things get interesting. I think what you were talking about, Nisha. So we saw an increase in the average liability claims submitted between 2016 and 2019, and as what looks like an exponential increase in the average personal injury claim. Manisha, can you comment on this? What would be driving that?
I think, yeah, there's a multitude of factors. Okay, I think one is consumer awareness is at an all-time high. It's expedited through social media, so that already you've got that sort of volume-based audience, and that's really pushing and motivating for claims to actually come through. In addition, I think we're also seeing, increased medical costs, increased litigation costs that has an impact. And overall, people are no longer, just coming to our insurers and saying, I'm going to claim. They now have access to a multitude of, the legal fraternity. And so they come through the legal fraternity, and they've, really re-looked at how they frame their claims. And so general damages also has seen an increase in quantification when those summons or those letters of demands come through.
I think Anton, I read in your narrative that you submitted for the report, which our brokers will get later today. You made a comment that you felt with a lot of people, particularly the attorneys working from home, that a lot of claims that were about to prescribe seem to have been picked up again and given new life. Can you just explain that?
Oh, thanks, Simon. Yes. If one, obviously, working from home, lots of these, we saw them evolving all of a sudden, where, historically they would have prescribed or whatever. I think, once again, as Manisha, this is absolutely, there's a whole host of factors that play into it. And, on top of, the main issue, you can always look at the Consumer Protection Act. I think, the financial implications on we need to understand, and that also, I think, drives these claims. So I think at the end of the day, people now who were historically happy with getting a voucher or a free meal or whatever the case may be, now actually want proper damages paid. There are attorneys who also during this time didn't have a lot of work, who then revisited some of their clients and the claims and so forth. So yes, it is one of those things. But yeah, I mean, we can have a lead session of 4 hours just on this specific aspect.
Yeah. I thought this increase in personal injury claims, because I mean, percentage-wise, it's much greater than the average liability claim. I thought that was particularly interesting. But that little highlighted block on the graph on the right, that for me was an absolute shocker. We're obviously talking largely about the 2019 numbers here, but you mentioned that there's been a surge in slipper claims in 2020, and I found that surprising because I mean, for at least 3 months there was a hard lockdown, which meant people weren't moving around as much as they would normally. I mean, what can we expect to see happening in 2020? Is this gonna, I mean, is it just gonna explode, and why?
Sadly, yes, I do believe that it is going to explode. We are going to see quite a number of these summonses coming through and guys pushing it. As I mentioned earlier, the financial position of the individual third parties, is something that plays directly into explains for the surge in these things. Other aspect that sort of adds into the slip and trip planning is people not having proper medical aids in place. We are seeing an increase in matters where following a slip and trip, people are suing for a knee replacement or elbow reconstructive surgery and all kinds like that. And of course, medical expenses are increasing every year. But when we investigate these matters, we realize that the surgeries and procedures were in actual fact already on the cards before the person fell. So it's just guys taking that opportunity to make someone else pay for it because they might not have a proper medical aid in place, or they're just seeing it as an opportunity to make extra money on the side, if I can put it that way. But that's certainly what we've experienced so far.
I think that's shocking, actually, because it also, I think for a lot of people, they wouldn't view that as fraud, even though exactly what it is. It's like we were injured. It's just that while we're here, we're going to get something else done as well.
Correct. And of course, one of the main factors as well is, of course, with social media. So someone now getting injured and going to social saying, at this specific shop I slipped and this happened, and now the guys don't want to pay my surgery. That is taken as fact, on the social media platforms. Although if you drill down into the individual case, it's not necessarily true. But it is something that we deal with, and in order to protect our clients, we investigate these things properly, and we deal on its own merit. But yes, it's shocking, what we are seeing, especially, and we'll get into this at the next one for the 2020 year. But it's quite frightening what we have seen over the past year.
Yeah, thanks, Anton. Can we move on to the next slide, please, guys? Manisha, I think this one's for you. When we were chatting to business execs in our 34% of people said that they'd noticed a deterioration in the quality of products or workmanship by suppliers. And then related to that, it didn't appear that a significant portion of business owners were actually doing proper quality control audits on a regular basis. What do you make of this?
This is very interesting because this really ties into the underwriting process and sort of the questions that we're starting to ask. And so when you say to us, that you've seen this deterioration in the quality of workmanship from your suppliers, ultimately this is going to affect the business. So what we can see is a ripple effect, because if you are incorporating an inferior product that is not to your own quality standard into your product for end consumer consumption, effectively you're opening yourselves up to litigation in terms of product claims. And so that whole thing about quality audits comes back into play because it goes back to supply chain management. So the fact that people are recognizing that they've got these inferior products, and then furthermore, we're not doing the audit to check up on these products, it's just going to ripple. Our underwriting questions now that we're trying to cultivate is to actually understand the supply chain management and how often that the client actually goes and does a supplier audit, because the impact is either in products liability or products recall. And I think, Anthony, if you don't mind jumping in here, I'm not mistaken, our claims experience is a reflection that usually we actually pick up inferior product incorporation or risk management at claim stage. Whether it's metal filings in chocolate bars or glass in sugar, that only comes up when you actually get the claim.
That's correct, Manisha. I think if I can expand on what you just said, have experienced as you mentioned, metal shavings, grease, crystal, silicone, stuff like that, all kinds of contamination within product, and it's between the two main issues. One is the equipment being serviced in the normal way, but now because the people servicing the equipment is not fully staffed, they don't have the correct management measures in place like what they used to, or they're doing it quickly just to make some money, and move on to the next job. They don't make sure that the machines have adequately been checked after they've been repaired, and that then leaves the metal shade, all kinds of other stuff within the end product. Now, that's not directly linked to our insured. However, in terms of the Protection Act, they have to take the responsibility for it. We've seen drivers contaminating fuel and other chemicals and stuff like that because, instead of having two people in a truck, there's not only one person because they're trying to cut costs. So it really, from a risk management perspective, this is something that's quite material and that we already see, claims coming from.
But I think, Anton, it also ties back
guys.
to, sorry, Simon, if you don't mind, just kind of a quick one. It ties back to the economic environment that we're working in, because people are impacted economically. And so there is sort of a cutting of risk management because everyone's watching the expenses. But the fact is, the more we sort of cut our expenses at critical areas, there is long-lasting effects for the future. Thanks, Simon.
Correct.
Absolutely.
Correct.
Thanks, guys. Next slide, please. Oh, sorry, Anton. I think what you were just about to talk to is on this next slide. We asked business owners about sharing more information with us, and interestingly, 31% of business owners said that or 31% of companies that keep some kind of risk register, that they don't actually share those with their insurers or their brokers. 19% of the respondents we spoke to said they don't use contracts. This comment in particular was quite strong from the SME sector, but I think with both of these together, I mean, you've kind of melting pot where you can have a serious spike in claims activity. Any comments?
Simon, yes. Last year, we've seen a couple of material claims being settled simply because our insured did not apply their minds when they entered into certain contracts. In certain instances, there were no contracts whatsoever, and in certain other respects, there were amendments, services required, which was never put in as an annexure and a formal change to the wording. And the problem is when there is a claim, you go back to the contract. And material risk that we run within the liability across the business. If we are left with defending a claim where there's no contract in place to detail what is required, it is very, very difficult to defend that, firstly, and secondly, it can then lead to the ultimate, sort of us having to pay the damages for that. And of course, instances and recall, the actual damages at the end of the day exceeded the limit of indemnity, which then, of course, directly into the financial position of our insured, not just his excess. So it is of paramount importance that the guys actually, the service they provide and whatever they do is codified correctly.
Thank you. Manisha, what do you do with these risk registers if you get them?
As it's really important on the risk register, and I know a lot of insurers are not comfortable giving them. So it's really confidential information that we ourselves hold confidentiality. But the reason we're asking for it is that we want to have a better understanding on what risks you see your business experiencing and at what level you're having these conversations. We want insights into how you're running your business. So if you have operational maintenance as one of those key points right on top, that gives us a concept or an idea that you are actually proactively talking about that at a board level, that there is constant monitoring of that particular risk item. So those risk registers gives us real insight into the business. It also talks about the operational side of it, because a risk register is not only there to make things, well, we've identified 5 risks. they also talk about the operational. How are you putting those risk items or dealing with those risk items? A keen observation from our side in recent months has been that despite having fantastic operational manuals or procedures on a very, very senior level, what happens is it doesn't filter down to the rest of the team. And so that's where you start opening yourselves up to legal liability, is because we don't see practice of those operational procedures.
Sure, thank you. Guys, can we move on to the next slide, please? I'm not going to ask you to comment on this, Manisha and Anton. Just safe to say to the audience that it's worth looking at this when you take a look at the report. And we've seen a dramatic increase in labor disputes, CCMA and labor court activity in particular over the last 12 months. A lot of that is obviously going to be exacerbated by COVID, which means there's a knock-on effect to things like practices. Can we move on to the next slide, please? Just in closing, Manisha, from your perspective, things to watch out for in 2021?
I definitely think spreader fire explosion, very big trend in that space. I think a lot of people would have seen this morning, we've got a plant in Durban that is burning. It's a developing story. So I would expect that assets underwriters and liability underwriters will be probing questions, whether it's warehousing of chemicals or any sort of fire protection systems that you should see questions in that space. I don't anticipate that it should be as much more work for the liability market, because in the assets market, they're already asking these questions. From a pricing and deductible trend, we still do expect rate increases in terms of pricing, also a decrease in capacity. You can see the market moving more towards a co-insurance model because there's an increase in severity losses that are coming through and an increase in deductible structures. There really is a need for, the insured to take on a higher deductible. Now, this is motivated two ways. One is they want to see a reduction in their premium. Alternatively, they are seeing expenses, so they choose to take the lower premium. But that means that they need to implement proper risk management. Otherwise, they're not going to be able to meet their deductibles that they've elected. And that has, repercussions in terms of reputation or client relationship when it comes to the third party as well, from a longevity perspective. I think from a COVID knock-on effect, we're seeing diversification in the market in a whole new space. Guys that were doing clothes are now manufacturing sanitizers, etc. So it's so important from a client perspective. Those sort of things are discussed with the intermediaries and your insurers. It's a changing risk landscape. And the question is, are we accounting for it? And is the risk management and the operation of the business adapting to deal with this sort of needs analysis around the changing landscape?
Thanks, Manisha. And Anton, from you?
Simon, yes, I fully support what Manisha just said. Personally, I think we're going to see a continued increase trips, as we mentioned earlier, as a result of the other sub-products. In all claims, we're going to see an increase. But then also, I believe that we're going to see a spike in EPL claims given COVID. As lots of companies close down or rationalize their workforce, we'll see some activity in that space as well.
Thank you. Thanks, guys. Anton, I think you're staying with me for the next segment. Manisha, thank you so much for your contribution.
Thanks, Simon, and thanks, Anton.
Thanks, Manisha.
And by the power of technology, Manisha has turned into Malcolm. Welcome, Malcolm.
Thank you, Simon. Glad to be here.
So, yeah, just by way of introduction, Malcolm Padiachi looks after our liability and professional indemnity divisions. He's going to be just giving us his insights from the survey and the professional indemnity environment in particular. Malcolm, I think it would be remiss of us not to look at these numbers from an incurred claims perspective. After Gareth's talk earlier, I think there was quite a big focus on how the loss ratio really has developed related to PI in particular. What do you expect to happen? Because again, much like we saw in the liability environment, it does appear that there's been a significant drop in incurred claims between 2018 and 2019. Can you just kind of talk us through, firstly, what is causing that?
So Simon, I think firstly, it's too early to draw any conclusions from these early years. I mean, as Gareth explained in his presentation earlier, our empirical, and it's common knowledge that PI claims are long-tailed in nature. Our empirical data shows, from the last 35 years that we've been in business, that PI claims generally take about 60 months to mature. So that's a period of 5 years in which full maturity of any particular year of insurance, presents itself. So it's too early to draw any firm conclusions from that, because definitely these years that as displayed on that slide will develop as we going along. Despite the fact that we have, robust reserving philosophies, as Anton mentioned earlier, with Manisha, that as and when facts develop in a case, changes the way a claim is looked at and the way we settle it. So the other factor that contributes to this decline is probably due to the fact that we've recently, well, not recently, since early 2018, adopted a very robust and aggressive re-underwriting, repricing strategy. As a result of which we looked at our book, which was, and as Gareth mentioned in his presentation, the PI part of the business was the most distressed book of business. We had to re-look at the business, clean out the books, gave notice on accounts that didn't quite fit our appetite, which historically we took on from an accommodation basis, and due to the elements of being a victim in the soft market cycle. As a result of that clean out that I've mentioned, we've lost a lot of policies, and the majority of the policies that contributed to the distressed PI was largely in the built environment, and the built environment involves anybody that's involved in the construction side, including the law firm. Subsequently, we'd re-looked at those portfolios, and we weren't successful in securing it or retaining it because of the way we re-underwrote the risk and increased and restricted covers. And we have the significant absence of those risks in our portfolio. So that could also contribute to the fact that we're starting to see a drop in claims volumes. But I do think, though, that these years will develop as claims mature. Thanks.
Thanks so much, Malcolm. Anton, from you, I mean, you're seeing a drop in claims volumes. Are we still noting that the environment is, because I'm assuming we still have built environment clients on our books, we're still handling those claims. Are you noticing any trends there?
Simon, yes, look, we deal with each one of these claims on its own merits. And I mean, insofar as trends are concerned, we are experiencing quite a number of claims where, professionals are simply seen as the last line of to try and get some money back, whether it's legitimate or not. And we are seeing professionals being accused of negligence across the board, even for, especially in the built environment, where certain contractors, especially what we've seen lately, is various contractors, either going into business rescue or, liquidating and so forth. And, of course, gone, the only person left standing is the individual. And of course, that individual has got PI cover in place. And so we're seeing a push towards claims being made against these individuals simply because of the fact they're around and that they have insurance policies in place. We have thus far had a very good track record in defending these individuals. But what we are seeing is that the defense cost at the end of the day exceeds the original claim. So that's definitely a trend that we picked up over the past year or so.
Okay, let's sorry, can we look at the next slide, please? So I found this interesting. So we asked all the professionals that were in our survey, and I think there were some 200 odd, maybe a little higher than that, if they'd actually had a personal negligence claim in the 2 years prior to the survey. And then we sort of overlaid that with with our own claims experience, looking at the number of professionals we've got on our portfolio and the claims that have been lodged against them. And the number it's almost double in our experience. What would the reason be for this disconnect, Malcolm?
Simon, yeah, I think there's a few factors that affect this. Firstly, obviously the respondents that we interviewed, not all of them are our clients. We at SHA, from a PI perspective, have thousands and thousands of PI policies. I think at last count it was around 6,500 or 7,000 PI policies, excluding schemes that we have. We have schemes where there's many hundreds of policies within the schemes. So it stands to reason then that with so many policies that we have at SHA, we would have double the numbers of claims intimated than our respondents would have indicated. The other thing is, I suspect that, and this has been an issue for a while, is the issue around the requirement of notifying claims to an insurer, and the misunderstanding in respect of clients as far as PI policy is concerned. And that there is a real issue out there in that clients only perceive that they're required to notify a claim in terms of the PI policy only when they receive a letter of demand or a summons. I mean, all PI policies that's available in the market, locally and internationally, require that the insured notify a circumstance or intimation of a claim, however remote it may be, to your insurer, so that we are able to look into the claim and not prejudice either the insured's position or the insurer's position. And I think that misunderstanding also speaks to the low percentage of negligence claims as well, that has been indicated by the respondents in the survey.
Thanks. Anton, would you expect this to change?
Simon, no. I mean, I fully support what you're saying. And I think, what we are seeing as well is lots of times the professionals who are working on a specific contract don't believe that there's going to be a claim. So, they need to interact with their brokers whenever there is something like this. But I think at this point in time, there's still the old type of approach of, well, no one will sue me and, I'm doing my work right. So, they don't foresee it. But the problem is that, with consumer activism where it is, lots of people are now pushing for these claims. So it could be that the survey results were just simply the individual. I don't believe anyone will sue me. And sadly, at some other stage, someone will. That's the reality if you look at our stats.
So Simon, can I just maybe just highlight the important point here, to our brokers out there, that they need to indicate to their clients the importance of notifying circumstances so that they don't fall foul of the notification provisions under a PI policy. And it's not only in respect of a SHA policy, all PI policies have notification conditions on it. And, if a client fails or delays in notifying potential claims, they could fall foul of those provisions and have a potential claim denied or rejected. Thanks.
Yeah, thanks, Malcolm.
Sorry, Simon, just also to add in there, because this is an exceptionally important point that Malcolm raised. From the claims side, it's always very difficult to try and reconstruct the facts surrounding these highly complex claims if we are not involved from day one. So, in certain cases, we've seen that, the time the summons hits, whatever, employees have changed. Lots of things have changed. The contracts have been destroyed. All kinds of issues like that. So, just to confirm, if we the earlier we are involved, the better the chance of sorting out the matter without any potential problems, and of course, with our insured claim rejected, which is something that we don't really want to do. But if something like this happens, the contract reads the way it does. So please engage with us if there's uncertainty. Rather phone me or my team, and we'll certainly try and help in deciding how to proceed with the incident.
That's good advice. I just want to share with the brokers, out of the 200 odd brokers that we spoke to in the survey, around 90%, I'm rounding off here, said that they didn't believe their clients read their policy documents. I mean, it's just kind of reinforcing what you're saying. You know, probably that notification clause is not even getting looked at, and I guess it falls on the broker to explain these things to their clients. Can we move on to the next slide, please? Okay, so I think this is an encouraging number. I looked at it slightly differently when I saw it. 80% of professionals that we surveyed said that they have PI cover. But Malcolm, you kind of looked at this a little differently. Like, you know, 1/5 of the guys don't have cover. What do you make of that?
Yeah, I mean, Simon, that's a shocking stat. You know, 20% of the respondents indicated that they don't have PI cover. You know, any business, and not only in the professional space, any business that offers a service or provides advice, be it for a fee or not, incurs a potential PI liability. And I always use the analogy that any business operating with PI insurance, you know, whether it's a standalone PI policy or an extension under your general liability, is like playing Russian roulette, you know, a hit and miss. Because a litigation, just an allegation of negligence against the firm from a litigation point of view could have dire consequences in the firm. From a cost point of view, you know, going through, you know, through an entire litigation could potentially bankrupt any firm or company. So the importance of PI insurance is primarily, you know, a defense cost policy, defending you as to any allegations made against you, be it valid or not. And it's primarily there as a defense cost policy. Yes, it does cover you in the event of any liability attaching to you subsequent to settlement or a court award, but primarily it's for defense. And it's critical that every company, and not only professional companies, have PI cover in place.
Yeah, thanks,
yes, no, I fully
Malcolm. Just
that.
next to that, Anton?
Sorry, Simon. I just wanted to add in that, you know, in addition to this, you know, they must have cover, but they must make sure that they have adequate cover. So they must get advice from their broker as to, you know, what limits and stuff like that to buy. Because we have seen matters in the past year where they would buy a limit of R1 million and the defense cost exceeded the R1 million within 9 months. So it's exceptionally important to get that advice and to buy the correct limit as well.
I hear you, and actually that speaks to the infographic just next to that one, where we 27% of the guys that do buy the cover said that they only buy it because there's some kind of rule or regulation forcing them to do it. How dangerous is that motivation for buying insurance, Malcolm?
No, absolutely. It's extremely dangerous. You know, one can assume that for those individuals, you know, they either don't understand what a PI policy covers, don't understand whether it would cover them to protect their business against, you know, professional negligence claims. They could also be uninsured, you know, uninformed about what would be the correct limit of indemnity to carry. You know, if the regulation calls for R1 million cover, as Anton expressed, you know, they would take out R1 million cover, but their business is totally, you know, potentially exposed to multitudes of that R1 million cover. So it's a massive risk from not understanding what you know, the limits and the cover that a PI policy operates.
Yeah, thank you. Can we move on to the next slide, please? Okay, this was a bit surprising for me. I don't recall what the numbers were here, but we seem to have seen a spike in claims against Audits. Anton, what would the reason for that be?
Simon, in short, looking at the most of these claims, the architect will act as a principal agent or project manager. So they coordinate everything, they make sure everything works with them. The problem is that, you know, and I mentioned this earlier, where you have a contractor that, you know, for poor workmanship or whatever else, the architect is seen as the go-to person for everything and the responsible person for everything, which obviously, even in terms of their contracts, is quite clear that they aren't responsible for everything. They are only responsible for their designs and everything else. And then, of course, the other professionals and the contractors, whatever, are responsible for their portions. However, what's happening is that the third parties just puts the architect in their firing line, and that's it. You're responsible for anything that happens. And again, the increased risk here is, because of, what we saw in the last year with COVID, lots of the smaller companies either going into business rescue or being liquidated. There's no more contractor to sue, and then they just go simply architects. So lots of the stuff that we've defended successfully. But of course, the cost associated with it is very, very exorbitant. If I could, not exorbitant, but it's quite high. And it's still, at the end of the day, is money that's spent, and it's not money that we're going to get back.
Yeah,
I think I saw in the report it was 9 million or something. Yes, sorry, Malcolm.
Yeah, just to add on to what Anton said, and I just want to qualify those stats a bit, is that yes, although we are seeing an increase in claims against architects, because generally what happens on a construction site, when something goes wrong, the owner of the project looks for reimbursement from the entire professional team, and naturally the architects gets drawn into those disputes as well, which which then activate this PI policy, and we'd have to defend him against those allegations. But the particular large spike on the architect's claim was largely due to one claim which was developing for quite a while now against an architect, where he was sued. We defended him because he believed, and we had experts supporting that he wasn't negligent. And we went all through the court systems. We won at the lower courts. The claimant then appealed to the superior courts, and we won again in the superior courts. So as you can imagine, the litigation cost itself there almost, fortunately he had enough limit of indemnity, but it almost eroded his limit of indemnity. So the cost aspect, again, is not the critical point, is that make sure your insureds have adequate limits of indemnity, when purchasing PI insurance. So it was largely due to, one claim, but there's certainly an increase in claims against architects. The other trends that we're seeing against architects is, in this depressed economy, when projects run over costs, they look to the architect for cost overrun type claims, because the architect is responsible, for monitoring that and ensuring that, these projects are delivered in time and within budget. So he naturally gets dragged into these type of disputes as well.
Yeah, correct. Thank you. Thanks, guys. I noticed in the report, I'm not going to ask you to comment, I'll just direct brokers to take a look at it, but largely influenced by COVID, but not only. We saw that a lot of professionals were taking on new tasks a little bit outside of their normal professional activities, and obviously that comes with a significant exposure. In this year's report, just over 50%, which matched kind of what we were looking at last year as well. Can we move on to the last slide?
Sorry, I know you said you didn't want to comment, Simon, but can I comment on the previous slide quickly on that? Just
for the audience's benefit, Malcolm is a lawyer, which is why he's quite keen to keep talking. But I'm
quite passionate about the subject. I don't know how we're doing for time. Yeah. But the concern for me here is that consulting firms, and I'll speak again in the built environment, because that's where the most demand for PI insurance is that I'm finding consulting firms are pivoting their business to obviously gain income or other streams of income in a depressed economy. But the concern is, it's a general known fact that we have a skills drain in South Africa, where, there's a massive gap between the experienced professionals and the newer professionals coming out of the universities. And in between, there's a massive gap because, professionals have either exited the business due to depressed economy, or have emigrated to seek greener pastures. And that skills gap is concerning, because we're now pivoting to take on other a scope of activities to gain additional income, but do we have the skills to undertake that? And that's where mistakes come in. That's where PI claims come in, and that's the massive concern that I see, with that stat. Thanks.
Fair point. Thank you. Next slide, please, guys. Just 1 minute each of you as a wrap up. Things that we should be looking toward in 2021. Any trends, anything that we should look out for? Malcolm?
Yeah, just quickly for me, again, the issue of of the skills gap, the brain drain in South Africa. We all know government, in trying to resuscitate the economy, has pledged enormous amounts of money for infrastructure development to kickstart the economy. The problem is, once it gets off the ground, do we have the skills to support and deal with those large projects, infrastructure projects that's going to get off the ground now? And when you don't have the skills, we have a situation where everybody's hungry for the work. It becomes a pricing competition. You're tendering at cheaper prices, and when you do get awarded at a lower price, you don't dedicate the resources that you would normally dedicate when you charge the correct fee. And that's where you get issues around corners being cut, mistakes creeping in, PI claims. And then, as you see from Gareth's email, the PI claims trends have just gotten out of a kilter with the rates that we've been charging historically as well. So we just need to make sure that we charge appropriately for the risks, and that insureds in turn ensure that they have proper risk management protocols in place to avoid these type of mistakes and claims coming in. Thanks.
Thanks, Malcolm. Anton, from you, particularly claims on the horizon?
Simon, we don't foresee anything, any major changes so far as actual claims are concerned, based on our historic stats. We don't foresee anything materially new coming into the equation. But I just want to mention that, we are seeing is that there's a material increase in legal costs. And furthermore, with some of these matters, they're becoming exceptionally complex and complicated. Attorneys at a higher rate are spending more time on dealing with these matters. So it is just that's one of the trends that we're seeing within this space. So that I just want to bring that to the table.
Thank you. I think to your point, we saw a 56% increase in fees between 2016 and 2019, way above the inflation rate. So yeah, thanks for that. Thank you both, gents. So we're going to take a little break from the panel discussion. I'm going to hand over to Alicia, but once again, thank you so much.
Thank you, guys.
Thank you very much.
Alicia, take us through our digital journey. Over to you.
Fantastic. Thank you, Simon. And thanks for everybody joining us online today. And it's great to connect with some of our brokers. And this actually bodes true testament that the technological pace of change has really advanced to such a level that an industry like ours, believe it or not, which thrives on networking and connectedness, can actually survive not being on a golf course. Now, Dave, you will very much disagree with me on that point, I know, but it's true that we've adapted to this new trend of online events. In fact, brokers who participated in our survey actually indicated that they are more inclined to participate in online training these days. Now, as you will note that they were strict in allotting me 10 minutes today, and I hope it's not because I speak too much, but although some may dispute that, but I presumed it was because that in digital, we can attest that when a broker works on a platform, all it takes to acquire a quote and in certain cases activate a policy is under 10 minutes. I'll let that sink in for a bit. So how did we get to the stage of broking in a digital world, and what strides did we really make, to transform our business digitally? Let's have a look. And we understand that for some entities, their digital journey is only beginning now. But for us, this really began in and about 2015. So we saw a need in the market to simplify complex risks for our brokers and offer a solution that's really future fit. Now, the covers you'll find on the platform are all tailored towards SME markets, which is why we began launching with public liability initially, and thereafter made strides to open up that platform through to the brokers. And in 2019, we really launched with the professional indemnity cover, including many other extensions. Now, this trend line that you're seeing this morning is indicative of the milestones that we reached in just this short span of time. Now, historically, it's really unheard of where a company announces that they're launching a new product, in the last month of the year. But we are proud to announce that our Cyber SME cover has now launched. And coupled with this exciting news is another milestone attained as this broker platform to date reaches 40 million gross written premiums. Really, this is all attributed to the premium that's driven through the platform, and it's thanks to our brokers. Now, with the successful deployment of our digital initiatives in our SME area, we're now reviewing how we can actually further transform the business to maintain this digital strategy that we're on and the trajectory that we're heading towards. So this is just an overview of what the Pocket Underwriter really offers. And initially, we were clear in our design and our features of what we wanted the platform to really achieve. Now, the Pocket Underwriter extends far beyond just, the traditional broker tool, and not only does it generate quotes and policy documents, as I said, within minutes, but it also offers brokers insight into complex special risks. And in this, it also enables brokers to acquire up to 12 CPD hours as well. Now, just taking a deep dive into the specialist lines, our public liability includes various extensions, 29 to be precise. And it's really targeted at entities with a turnover below 20 million, and it can scale up to a limit of about 25 million. But it doesn't stop there. If brokers do need to acquire a limit above 25 million, our underwriters in the office can actually extend this limit to 50 million. Now, talking to the professional indemnity sector, the parameters for the PI cover is really clear-cut. All you need to do is remember 10 and 10. So the limit of indemnity that we can go up to is 10 million, and the fee income needs to be below 10 million as well. Amongst this, we really looked at the professionals, and we wanted to cater for a wide range of professionals. So it stems from architects to attorneys, engineers, loss adjusters, as well as accountants, just to name about a few. To this end, we also recently saw a spike in cyber events, and we deemed it necessary to meet the market with an end-to-end solution for cyber, one that not only covers third-party, but covers first and third-party losses for SMEs. But actually, this extends beyond the bounds to serve the client where it matters the most, to speak to risk mitigation strategies. And this is what we do in supporting pre and post incidents. And we did this because it's not only a way to support the client at claim stage, but it's rather to build that long-lasting relationship in this tripartite relationship between the broker, the client, and us from inception of the policy. And this really, what it does is creates awareness around cyber risks. It drives proper risk management, and it provides ongoing support at very critical times that the clients really need. Now, this is just a snapshot of our 4 top covers that are sold predominantly on the broker platform. And you'll know professional indemnity is ranked the highest and sold predominantly. And we believe that this could be attributed not only to the price, which is marketed at SMEs, but because of the additional covers that you can bolt onto professional indemnity cover. Now, we also pulled apart the data and we looked at it, and as you can see on the screen, we looked at the hit rate specifically, and you're probably thinking 75% is phenomenal from quote to an activation of the actual policy. But what we attributed this towards is really when a client is engaging with a broker, be it online or face-to-face, it actually makes it easier to conclude the sale with using the Pocket Underwriter, because you'll have your full suite of covers, you have a whole explanation, you have claims videos. It actually engages for full of value in terms of the broker to client engagement as well. And you'll also note that we see a relatively high rate of public liability being quoted by brokers, as well as standalone covers such as D&O and GPA. Now, over the past 5 years, we've built up a great broker audience who actively utilize the platform. And we also have phenomenal broker testimonials. To date, in fact, we have 1,200 broker users on the platform. The spike we note in usage was actually seen around the time of lockdown, where many brokers took to using the platform, coupled with various communication tools such as MS Teams and Zoom. And in real time, they were able to quote and activate the policy in under 10 minutes as well. So it really served the brokers well in this time. And lastly, if you're indicating that you sort of have some fear that, oh my God, I don't have access to the platform yet, please, our details are on the screen. Click sign up now or get in contact with me. We'll be happy to take you through our digital platform. Now, lastly, and in closing, I'd like to leave you with just a short teaser clip of what's in store with regards to our cyber SME offering. Thanks, Simon. Back to you.
Thanks, Alicia, for that rather terrifying video. But I think it hits home. And yeah, we certainly hope that we're going to see a lot more brokers using the Pocket Underwriter for cyber going forward. So thank you for that and good job. Right, moving back on to the survey. I'm honored yet again to be joined by Anton. As the man who controls the claims, he's obviously involved in all these multiple lines of business for his sins. So welcome back, Anton. And we're joined for the first time today by David Honeyman. Welcome, Dave.
Thank you very much.
So yeah, can we get into the presentation? Next slide, please, guys. Okay, so as has been the norm today, just having a quick look at the incurred claims. Dave, not much change between 2018 and 2019. Anton, from your perspective, I guess you classify this as not long tail business, so maybe a little bit more predictable.
Yes, most definitely. You know, when analyzing all the numbers, we can see the NH tail is roughly about 2 years. That ties in with some of the extensions and the limits allowed in terms of the policy wording itself. So people have 2 years after the incident to bring all the stuff to the table. The claim has to be notified within 6 months or 180 days, not 6 months. You know, what we do see is that the final claims figures will be in by the close of 2 years. So, you know, yes, very more predictable than the other areas.
Okay, thanks. Dave, are you seeing anything in particular in terms of claims activity? You know, what's kind of changing? I find it hard to believe that certainly there'd be no difference between 2018-19, but definitely going into 2020. What are you seeing as the head of this area?
I think the reduction in claims is just a result of magnificent underwriting to start off with. But I think there's certainly, over the last couple of years, we've certainly reduced our dependency or our large book of business in the corporate space. So certainly, whereas about 4 or 5 years ago, we probably had 70% of our large corporate business. And I think we're probably down to about 30% being large corporates. And our focus being more on the smaller commercial SME type space. Schools, so where benefits are generally a lot lower than what they would be in the corporate space. I think that would show why some of the trends are coming downwards. But yeah, look, the typical claim in our environment is going to be sort of 80% death or in car accident or death by murder and assault. I mean, that's really where I come from. And then also in the school space, obviously emergency expenses is where we're seeing most of the claims coming in that area.
Is there an increase in, I mean, it's just sort of something people ask me, like on the crime-related claims, the murder, assault, that sort of thing. Is that increasing?
So prior to 2020, I would have said no. Certainly, it was looking as if it was slightly on the decrease, more particularly in a blue-collar environment, and that the crime was starting to sort of appear more in the white-collar kind of environment. More senior levels of staff getting involved in murder and assault type situations. But again, now sort of in 2020, I think we can see a spike of that again. And this will be driven by the socioeconomic environment that we're living in. And certainly, you know, there is going to be a spike, we believe, in the in the hijacking and just general murder and assault due to poverty out there.
Oh, it's terrible.
Yeah, no,
it's a horrible thing to speak about, but you see it. Yes, sorry, go ahead, Anton.
No, I fully support what Dave's saying. It's definitely something that's on our radar screen. And, you know, what we have seen, you know, just to tie in with what and to support and what he was saying, various times where there's discussions and issues surrounding employees and striking for additional salaries and stuff like that, we do see, you know, more of the senior employees being involved in murder and attacks. So yes, it's definitely something that's on our radar screen, and we are definitely going to see a spike in that going forward.
Simon, if I can just comment there as well, I think where we're starting to see those kind of spikes is, and it's quite relevant now in the situation that we're in, is that, you know, HR individuals, when they get into disputes with regards to retrenchments or with regards to disciplinary action, and I'm assuming that in a post-COVID environment, there's going to be a lot of disciplinary action as people find that employees haven't been working optimally or that they've been messing employers around. And also a retrenchment environment. This really puts top management at risk. And in major desperation kind of situations, it's amazing what can happen to those levels of employees. So that is certainly, I think, we would keep an eye radar in 2020.
Yeah,
sure. Okay, thank you. Can we move on to the next slide, please? Yeah, look, I actually wrote the segment in the report on COVID, and it was a particularly difficult one to do because the numbers that I was looking at were quite distressing. But Dave, I mean, this has an impact particularly on the A&H area for the 2020 numbers. So percent of the businesses we spoke to said that they had to make staff redundant by as much as 50%. 75% said that they're expecting the remaining staff to perform other tasks, I guess, to fill the gaps that were left by the people that had to be retrenched. And then on average, business owners told us that shifts were kind of working for 2 to 3 hours. I mean, what is the impact of this on the accident and health space, Dave?
I think to start off with, when we look at the redundancies, it certainly will have effect on premium income. Premium is obviously derived as a percentage of total payroll. So we've already started seeing with some of our renewals and advice going into Jan and March next year, is that payrolls are starting to reduce, and you can see it. It's up 30-40% in the corporate space. So that's certainly going to have an impact on our book of business, I guess, and right across the A&H market. I think also if we start looking, and maybe Anton can also comment, but I think this will have an impact on claims. As we have more people working longer hours, possibly doing jobs that they are not maybe qualified to do, they're really just sort of standing in. I would imagine that there's a lot of employees who are working under very stressful conditions, and maybe not within their own work environment, but just in their own family. Just, you know, maybe their spouse has been retrenched, or their children have been retrenched, or something along those lines. There's going to be a lot of anxiety, maybe morale issues in companies, and you know, when you start additional things out of employees, I think their morale does go down, and you know, just the general kind of feeling amongst these employees, I think will drive claims up, and more particularly when it comes to work-related injuries, not maybe concentrating at 100% of what they should be.
Yeah, Anton?
Yeah, no, fully support Dave in that statement. We are certainly expecting a increase in you know, especially in your industrial type sectors and so forth, where someone, you know, they've been working on a specific whatever for how many years, and all of a sudden they've got to now work on two, you know, lose focus because they're a little bit more tired. So we are certainly expecting that. And I mean, another thing that factors into morale, you know, obviously is the guys rationalizing their labor forces. And, you know, there are certain industry bodies that have highlighted a potential additional risk in the sense that, you know, our A&H policies might be used to, you know, fund some of the retrenchment benefits, if I can put it that way. Luckily, we haven't seen very many of those, but it is definitely something that could potentially follow from this during the next year.
Yeah, thanks. I read in the survey, I think there was a quote from the American Psychological Association a couple of years back. They did a study. They said something like 60 to 80% of workplace injuries were actually caused as a result of low employee morale. That was in the US, obviously, but one would expect to see a similar sort of thing happening in South Africa over this period. Can we move on to the next slide, please? The compensation for occupational injuries and diseases fund is the first port of call for injured employees via their employers. 86% of the employers we spoke to said they hadn't actually submitted a claim in the last 12 months. That could be attributed to the lockdown. Dave, did that surprise you?
Not really. I think it's pretty much in line with what we had last year. I think employers have lost confidence in the fund. I think there's a lot of frustration out there with companies trying to deal with the compensation fund. And it's quite disappointing, but it's, you know, it's been there for years and I don't see it improving. You know, I get a sense, and I'm fortunate enough to sit in a lot of client meetings with brokers, and you know, I mean, this is the question that I pretty much focus on with them, and they just say they don't have the time to submit a quick claim because, you know what, it's never going to get looked at. You're going to wait 2 years. You've got to fill in 25 pages worth of documentation to get things sorted out. So they'd rather just give the employee 500 Rand and go and get, you know, treated by themselves, which is just but yeah, so I'm not surprised at the stat, but I'm disappointed at it.
Dave, do you think that be getting involved in these issues with their clients? Should they be giving them advice around COID? 72% said they don't at the moment.
Yeah, it's a debate that I think we sort of get into, but you know, as a broker, they're going to say it's not an insurance product. Therefore, we're giving advice on it, and that's a fair call. On the other side, a massive risk to the business, you know, so if you're highlighting potential risks to your clients, certain non-compliance or your inability to a COID claim within your business, I think is a massive risk to the senior management team of that business. I'm sure you've seen recent sort of media reports suggesting that the COID are going to start imposing massive penalties on companies that don't submit their COID claims on time. And that is, you know, that's something that I think brokers should be highlighting. And, you know, it's always very easy for a company to turn around and say that COID is absolutely useless and, you know, there's no ways that we can work with these people. But, you know, 99% of companies don't submit the claims correctly, you know, and if they're not going to submit the claims correctly, then they're not going to be handled. So perhaps there is an avenue for insurance, whether it's brokers or insurers, to help clients with this. You can't ignore it any longer, and it has a major impact on your employee force and also on the senior management team of the business. So I would encourage brokers to maybe get us involved, or, you know, get insurers involved and help them and help the clients through this process. We're available for them and their employees.
Yeah, thanks, Dave. Can we move on to the next slide, please? I guess again, a crime-related issue. Kidnapping and ransom is one of the covers that we do offer at SHA. The SAPS stats that were published earlier this year showed that there was 133% increase in kidnappings. Dave, is this inside South Africa? I guess if it's SAPS, it is.
Yeah.
Okay, so it's not people traveling abroad.
No. This is inside South Africa. So it's a case of, so I think the number in total was 6,600 sort of kidnappings in South Africa in 2019. And then there's sort of further stats in the bottom of that suggested only 2.5% of those were kidnapped for ransom. Okay, so that would work out to about 160 odd sort of kidnapped for ransoms. I think where these stats are slightly skewed, Simon, is that these would relate to crimes reported to the police. And I think the environment that we operate in and the intentions that we're providing are not linked to that. So there are massive reports worldwide suggesting that like sort of 90% of kidnapped for ransoms are not to the police, because that's the first thing that the person's going to tell you not to do is go to the police. I found it quite fascinating that 82% of clients said that's the first thing that they would do if they were advised that their employee had been kidnapped. Sorry?
They said that 82% said they'd phone the police as their first thing to do.
Yes, that's the first thing they'd do. So, you know, and probably a perception, and it's quite scary, to be honest, because firstly, I mean, that's going to be the first thing that they're going to say to you is, please don't contact the police, or else we're going to kill whoever it is. You know, so I think this is the true value of a kidnap and ransom policy. It's not really a ransom. It's not really about all of that. It's about having access to crisis control management for a team who can just guide you through the process, because they would be in contact with the police doing all the things, but they're really appointed to manage that entire crisis for you from start to beginning. They know who they're dealing with. They know how to deal with them. And that's just, the numbers are certainly increasing. And I think a fair underwriting perspective going into 2020 would be, you know, in a sort of socioeconomic environment that we find ourselves in, I do believe that that lends itself towards a potential increase in the kidnap for ransom space. Clients have got to be aware of it. They have a duty of care to protect their employees, more specifically if they are traveling and they're sending them out into various countries around the world. And it certainly is something that I think needs to be discussed with clients.
Yeah, good point. I'm just going to move on to the next slide. So we can, I think it's important that we discuss the outlook going forward. Anton, from your perspective, are you expecting changes in claims? I think you alluded to the fact that there might be some knock-on effects following COVID.
Yes, Simon, I know we definitely, obviously 2020, there was, because people weren't at work, there was a little reduction in the notifications, but we're certainly expecting a spike in the next year, you know, for lots of the reasons that I've already mentioned. It's you know, if people start getting desperate for money and they can't work and their hours have been cut or whatever they can, you know, all of a sudden you could get some, you know, self-inflicted injuries, which of course, you know, is very difficult to prove and so on, but we are definitely expecting a spike in claims for the next period.
Sure. Thanks, Anton. Dave, there were a number of issues here that I think you wanted to talk about. What's the xenophobia issue?
Yeah, so I mean, there's been quite a few reports in the papers, more specifically with the transporting sort of companies, where I think it's sort of widely known that in the transporting sort of industries and the hospitality industries, there's a lot of employees, foreign nationals, And there's a lot of talk about the Zero tax start, because obviously as people are losing their jobs and the level of sort of unemployment increases in that space, I just fear that there's going to be a backlash. And we're talking about a lot of people here. We're talking about sporting and hospitality. And we both know how that has been affected severely by COVID. And, you know, we've all anticipated that we'll only understand the true effects of COVID by July 2021. And I think it's something that we certainly have to look out for. And I do believe it will become a reality, unfortunately.
Can you talk a little bit about this issue around cover for children? I know a lot of brokers don't realize that we do that at SHA. How is that sort of fitting into 2021?
Yeah, so at SHA we've had a over the last couple of years to involve ourselves in schools insurance on the personal accident side. And the one thing that sort of always sort of gets to me is that, you know, there's very little disability benefit for children. And, you know, it's when you're sitting with your financial planner, and I don't know about you, but certainly my financial planner didn't ask me what my financial position would be if one of my kids were to become completely disabled, quadriplegic, tetraplegic, whatever, as a result of me, and how that would affect my finances. And I think the more we drill into that, I think it's just quite clear, you know, that the costs associated with looking after a child are huge. You know, it changes your financial position completely. You would need 24-hour medical care. You would have to look after that child potentially for the rest of your life and their life, and make sure that you have enough provision for that. Also, having cash available to try and assist in the development process and the treatment process of that disability. So we have developed products aimed at children on a full 24-hour basis, where we can provide up to anything up to 3 or 5 million rands worth of disability cover for kids. And it's taken off quite nicely. I think you talk to any mother who watches her son playing rugby on a Wednesday afternoon or Sunday morning, and, you know, for the, yeah, you've been there, I know. It's, yeah, I mean, it's, you don't know who's more at risk, the parents on the side of the field or the kids on the park. I mean, it's quite crazy. But yeah, it's certainly something that is going to take off. And, you know, it's relatively cheap kind of cover at 30 Rand a month per R1 million cover. So certainly something, you know, where, and brokers can also use this as an upsell opportunity to within their existing bases, whether they're a commercial base or a space, and get actual access to the individuals that work with them. So a lovely cross-selling initiative.
Oh, great. Thanks, Dave. That brings us to the end of the A&H segment. Wayne, I want to thank Anton. I think you're finally leaving us now at the end of this session. Appreciate your input and for sticking with us. And Dave, as always, a pleasure seeing you even on the small screen. So thank you so much, and all the best for 2021. Thank you.
Thanks. Thank you.
All right, we're moving into our final segment of the survey this afternoon. And I just want to remind everybody at home, there are 2 CPD hours allocated for this session. If you stay till the end, you'll get the QR code so that you can download the 44 page report in its entirety. You'll be the first people on the planet to get it. We'll also be announcing the winner of that UPS system, just in case load shedding does return to us again, which it probably will as the temperature starts dropping toward winter. But yeah, certainly last but not least, I'm joined by Tebogo Leshilo and Mwenda Dejenga. I work with both of them in the financial space. Yeah, welcome Tebogo, and welcome Mwenda.
Thanks, Simon. Thank you very much, Simon.
So, sure. I think we're going to be sort of working through some of the numbers in the financial line space now, and then I think we'll split into a little bit more detail in the DNO and cyberspace specifically. So financial lines, people who are watching Garrett's segment at the beginning would have seen that the line of business is quite volatile. You know, it goes from running quite well to suddenly having a spike. And of course, we had that lovely 500 million rand claim that had to be paid at the beginning of 2020. So there is an element of volatility here. Tebogo, I don't know if you want to comment on that at all. Certainly when it comes to pricing, we have a lot of brokers, certainly in the meetings I've been in, going, but I haven't had a claim. Why is my premium going up like this? Can you just talk to that?
Thanks, Simon. I think what we do need to take into consideration in the financial lines space is looking at the nature of the business that we underwrite, with it being financial institutions typically, as well as a lot of the listed entities. I think we're prone to a lot more severity type losses. So while we may not see as much frequency as you would in the other business units that we have here at SHA, looking at the line size that we put down, as well as factors such as the increase in regulatory changes, as well as the climate in the country, together with the types of business that we write, looking at a few years ago, we would have had a considerably larger commercial crime book than we have now. These are the factors that would certainly contribute to how we perform from a claims basis. I think that the one change that we have seen and is also evidenced in our loss ratio looks at some of the improvements and the changes that we've implemented in our underwriting standards as we've gone along in response to, I think, both the experience in the local and global insurance market hardening, as well as a response from our end in order to manage our loss ratios.
Sure, thanks. Wenda, yes, please.
Yeah, I think it's also just very important to bear in mind the long tail nature of these claims. So they do, like they do in the PI area as well as the liability area, do take a couple of years to mature.
Yeah, we know this all too well. I think that 2013 years proved to be quite infamous. Brokers can have a look at that when they get the report at the end, just to see where those spikes sort of came into the portfolio. Can we move on to the next slide, please? I'm going to focus on D&O for a second. So Tebogo, the next couple of slides, but I'm going to be focusing on you. Although Mwenda, please feel free to jump in. You don't have to wait until we get to the cyber segment. When we chatted to our brokers, Tebo, 14% of the respondents said that they'd actually noticed an increase in claims notifications, which kind of seems to be in line with what we're seeing at SHA. Is D&O big business issue here, or is it something that we're kind of seeing across the board, D&O claims activity?
I wouldn't say that D&O is simply a big business issue, especially where claims are concerned. I think even with looking at your smaller private companies and enterprises, there are multiple sources of claims that we need to take into consideration. It wouldn't just be the large entities who are looking at their public shareholders, perhaps bringing claims against them. So we are seeing an increase. I think this is also driven by an increase in consumer awareness as well as competitor activity. So it wouldn't just be your small entities. It wouldn't just be your large entities, sorry.
It's kind of across the board. I saw something in the report about an increase in companies actually bringing actions against their directors. Any idea why that would be? And has anything happened in the last year that could be influencing that?
Well, I think what we would see is greater calls for accountability on the part of directors. We have recently seen the ACA judgments relating to two large entities where the directors, where the shareholders of these companies brought claims against the directors. Unfortunately, these claims were dismissed by the Supreme Court of Appeal on account of the fact that it ought to have been the company who brought the claim against the directors and not the shareholders. The duty of the directors is owed to the company and not the shareholders. However, I think what we do need to take into consideration, especially from the importance of purchasing D&O cover in this regard, is looking at the legal defense costs that could be incurred in the event of allegations against directors, as well as the policy's response in supporting directors to respond to these.
Yeah, it's a good point. I mean, just to the other side of the slide there, and this is not something unique to financial lines, but we measured a 56% increase in legal fees since 2016. And I think I saw one of the remarks in the report, inflation over that period of time, year on year, was about 5.5%. So that kind of way outstrips that. And so if I understand what you're saying correctly, the directors should really be looking at this as at least they've got access to proper legal defense, rather than just kind of throwing their hands up in the air and saying, well, I can't defend myself, or not buying the cover because they think it'll happen to them.
No, absolutely, Simon. I think we need to take into consideration the fact that the long tail nature of D&O matters and other financial lines related matters is that these often drag on for a very long time. Looking at the complexity of some of these matters, the involvement of other parties such as regulators, you could see these high requirements for documents, lots of scrutiny from third parties, and these complex matters take a lot of work. We look at bringing in very specialized counsel. We need to take their costs into account as well. So it's not necessarily just looking at settlements in D&O matters, but the way in which claims pay out and how a company would protect their balance sheet as they sustain any type of defense.
Okay, thank you. Can we move on to the next slide? So risk management formed a significant part of this year's report, in fact, across all the lines of business. But when it came to corporate governance and to the audience, you'll see when we talk about the cyber environment, obviously risk management is critical, which I'll be discussing with Mwenda. But on the D&O side, I think business owners often don't think about risk management, or at least executives. So less than 50% of the respondents asked directors to sign any kind of conflict of interest documents. Less than 46% do criminal background checks, and under 20% actually said that they do lifestyle audits on key members and the board. What do you make of this? How important is this in your environment in the D&O space?
I think where this plays a big part is that you need to hold your directors and officers to a higher scrutiny than that you would of your employees even. So whilst your employees coming in, companies may conduct security checks, look into their background checks, you should be careful to not miss this critical step in appointing your directors and officers. I think what's very important as well is the reputational damage that this could have on a company. In the event that any time down the line, issues come up that may have been missed, perhaps at the point where any of these directors or officers were appointed. We live in a very challenging period in South Africa at the moment where we see allegations of corruption as well as wrongdoing in both the private and the public sector. And we can't undermine the importance of doing adequate checks to directors and officers. I think a lot of the core decisions that relate to the interests of the company are taken by these individuals, and we need to put them under that heightened level of scrutiny.
Yeah, Mwenda, I'm just going to throw a question at you here, because I know certainly on the crime side of the portfolio, I mean, do you think we could have avoided some of the issues that we've seen if these things had been implemented, particularly the background checks and the lifestyle audits?
Simon, I definitely think the implementation of lifestyle audits would have raised the red flags sooner, that management would have been able to possibly manage and uncover the fraudulent individuals quicker. It just needs to pay greater emphasis on their risk management, just having them, but actually implementing them and possibly auditing the success of such implementations.
Yeah, I agree. I mean, I was interested to note, I mean, we've been talking in our team about whether or not we should offer these services, and brokers seem to be quite keen to see them on our risk management bouquet. But interestingly, when we chatted to the brokers, I'm just looking at the report here, it says 35% of brokers felt that their clients would actually commit to these things if they were offered. And a further 50% thought that they might, if they were motivated so by, you know, changes in deductible structures or premiums. So that's we'll probably be focusing on as we go into 2021. Can we move on to the next slide, please? Here's a trend that we saw throughout the report. Manisha mentioned it in her segment. There we were talking about risk registers. We talk about audit or risk committee meetings. 27% of the respondents said no ways, they're not comfortable doing that with their underwriters or even with their brokers. What do you think of that? What do you make of it, Tebogo?
I understand the confidentiality concerns regarding sharing these minutes as well as results of audits. But I think where it certainly does contribute to the underwriting process is for us to understand that risk management simply doesn't exist as a tick box exercise within the operation of the business. I think it presents an opportunity for us to see that the risk strategy, risk mapping is fully embedded in the daily operations of a company. We'd also see some level of collaboration between your board of directors as well as between your senior management. So it certainly does contribute to our better comfort with regards to the risk profile of any insured. I think as well as the fact that at claims adjusting period, having sight of these measures that are taken could support any defense in respect of the directors and officers where there's allegations that they perhaps have failed in their fiduciary duties.
Yeah, thank you. I think that, you know, just looking at the other side of this infographic here, we asked the question about business rescue, and we asked the question because we think that this is on a lot of businesses' radars. They've just been through a particularly traumatic financial year in 2020. 23% of the respondents said they had no idea how or when to initiate business rescue. I don't have the number with me now, but I believe it was about 17% said they would actually wait until they were, you know, hit with a request or an order from shareholders or creditors before they would apply for business rescue. Yeah, I mean, how important is it for directors to understand how this works?
I think it's critical, especially in the economic climate that we find ourselves in. The impact of COVID-19 will be far-reaching on the financial position of a lot of companies. What directors should certainly do is utilize the services of external consultants, especially in the event that they see that they're reaching a point where they may be approaching insolvency or they're unable to pay their creditors. leaving the matter of business rescue or implementing some sort of turnaround strategy till too late, I think places undue exposure on directors and officers. So they certainly would be best put to be proactive in their stance regarding any challenging position that they might find themselves in. Business rescue is not, I think the incorrect impression that a lot of companies have is that this spells the end of a company, but it does not necessarily always end in litigation. We've seen that in a lot of instances. It actually allows the company time to regroup, re-strategize, and find some way with the support of the business rescue practitioner to continue their operations once they've gathered themselves together.
Shouldn't be as a delaying tactic to get out of an inevitable liquidation, basically. Thanks,
No,
thanks,
absolutely.
Tebo. When are we going to move on to the cyber now? Can we just have a look at the next slide, please? Okay, so 37%, it's a big number. 37% of the businesses we spoke to in the survey said they'd had some kind of cyber incident, which could have been anything from ransomware to hacking, even to an accidental breach. And 28% of businesses commented that they'd had some kind of security issues during lockdown. Can we just chat about this, Mwenda? I mean, were you surprised at 37%?
Not at all, Simon. I think businesses have answered this question particularly well, taking into account that breaches aren't necessarily the external getting into the system, but a data breach internally. Perhaps an individual sends the email to an incorrect recipient. That too taken into what we call so that percent wasn't that surprising at all, Simon. Insofar as the 28% that have experienced cyber problems during lockdown, I mean, COVID-19 pandemic has changed the manner in the workplace operates. We found ourselves in an unprecedented situation where many organizations had to face the fact that they had to have a large number of their workforce, if not the complete workforce, working from home. I don't think necessarily that this was planned for and planned for it that well. In the sense that the systems be upgraded to take into the high number of people working off the work network. So that figure for me is surprising either, Simon.
Yeah, I think everybody was rushing around trying to keep their operations going. I heard of even some large corporates, you know, switching off their VPN so that people could just access via the internet. That was certainly in sort of March, April of this year, which of course just opened up their systems to all sorts of nefarious individuals. Can we move on to the next slide, please? Yeah, so 19%, that's of the 37%, said that they'd had some kind of ransomware extortion in the past 12 months, and the ransom was under 50,000 in each case on average. Mwenda, is this a corporate issue or is it an SME issue? What are your thoughts?
I think the fact that the ransom amounts were 50,000 and below could have been targeted more at the smaller entities. I do think the demands for the larger entities would have been much larger. The payment of a ransom, be it by the individual company or be it by insurers, does trigger an important question to address. And the question that we need to possibly ask ourselves is, paying these ransom, we're not encouraging some kind of criminal? Are we not in some way funding terror, or are we not in some way adding to or contributing to anti-laundering events? At the end of the day, this is criminal activity. Important that
yeah, thanks.
Get to the point is
Thanks, Mwenda. I'm sorry, I'm not sure if it's just on my side, but the signal was kind of distorting a little bit. If I got what you were saying, you were saying that there might be some issues going forward with covering ransoms. Are we out of the reinsurance market that indicates this might dry up at some point, this type of cover?
Absolutely, Simon. We have seen some states in the East, to name Singapore, for example, where they have actually criminalized the payment of such ransom. So, I mean, an effort to this what criminals could perceive as lucrative business, this pool might actually dry up in future.
Yeah, that is interesting. Can we move on to the next slide, please? Yeah, so 17% of the businesses that said they'd had some kind of cyber incident in the past 12 months said that it cost them more than 250,000, and 10% of the companies that had to take their systems offline said that they were actually offline for more than 72 hours, which I have to say, when I read it, 72 hours offline, if that had to happen on holiday with my kids, there'd be a mini protest in the TV room. But I mean, is that something that you think is we should be worrying about going forward? Data breach, business interruption, these are obviously key parts of the cover.
Yes, absolutely. So business interruption is a coverage point in the cyber insurance policy, but this is essentially business for any loss in profits which arise directly from the cyber event. What business needs to be aware of is that they need to have some kind of proper business interruption plan. They can manage it well. This is having to back them up regularly and check that these backups have actually generated. We find is the case, then the amount of time is reduced quite significantly. I think what we also need to just bear in mind is that the business interruption section does time excess, which does attract to it. And the time excess system would have had to be down for a specific hours before policy can respond. Excesses can range from anything from 12 hours right up to 48 hours. Now, if you are offline for that long, can you imagine the impact that would take on your profits?
Yeah, I was just thinking about some of these businesses over like Cyber Monday. In a digital kind of online retail environment, you could be looking at 30% of your profit for the year just on that single day, or between Black Friday and Cyber Monday. So yeah, certainly business interruption means different things for different businesses. I think a hugely relevant part of the cover. Can we look at the next slide, please? This is the last part of the cyber discussion. I thought 18% was a fairly meaningful number of businesses that already have insurance. I was a little concerned with the 23%. What do you make of this, Mwenda?
I think 23% is learning. I thought that business doesn't necessarily understand exactly what data is in terms of a cyber policy. I think they might be under the incorrect impression, because they don't necessarily hold of third-party data cover necessarily for them. But we need to just unpack exactly what it is. It's not only third parties. All businesses employ staff. They would be capturing staff's ID numbers, they would staff physical addresses, details for the purposes of payroll. And all of this within the ambit of data and a PII, personally identification. And hold of that, businesses at risk of being held liable by their own employees. So I do think that it is conception, because they don't other data or large amounts of data, that this isn't necessarily for them. Every business should inform of cyber.
Sure, thank you. Thank you to both. We've just kind of run out of time, so I wish we could continue this. Thank you, Tebogo. Thanks, Mwenda. I always appreciate your input, and yeah, wish you all the best for the holidays, and I'll see you both back up in Joburg in 2021. So thank you.
Thanks, Simon.
Thank you very much, Simon.
To all the viewers, this is going to be this where I say goodbye to you. I just wanted to wrap up by saying I'd encourage you to download the report, read it. One of the things that we have noticed in all the various segments is that there does appear to be let's call it a trust deficit developing between insurers and clients, and there could be a variety of reasons for that. Not being prepared to share full risk information is only going to lead to problems at claims time. Whether you're talking liability, accident and health, cyber, D&O, it doesn't really matter. It's right across the board. And I think we have a collective responsibility to be transparent in how we underwrite, why we want specific information, and of course treat that with the utmost confidentiality and encourage our clients to collaborate more with us. If we want to avoid these continuous exponential increases in rates and deductibles and reductions in capacity, we're definitely going to have to look at ways that we can incorporate more risk management and more risk participation on the part of clients. The insurance is just a part of the risk management process. It's not the only part. And I think the more time we spend talking about that as an industry with our clients, the more likely we are to have a sustainable business going forward through 2021 and certainly into the next 35 years. With that, it's also a pleasure to be presenting this to all of you. I've loved spending time with you. Thank you so much, SHA team, and to Chandra, Noni, and Alicia in particular for putting this together, and the CN and Co team. And yeah, back to you in the studio, Noni. Thank you so much.
Thank you so much to you, Simon, and to all the panelists for carefully unpacking those survey results and interpreting those numbers and data in a way that we could all understand and follow. I certainly enjoyed it, and I'm sure all of the guests that were logged in enjoyed it as well. As Simon has mentioned, unfortunately, we were not able to go into a lot of detail with the survey. However, as mentioned, we will make the QR code available at the end of the session, so you can scan to download. Alternatively, you can visit our website and download the PDF version from there. So those are, you can access our survey from there. All right, so just a reminder as well, this event has been accredited for 2 CPD hours, and you can expect to receive your certificates in the course of next week. Right, you will also recall that at the beginning of our session, I did mention that we would be announcing the winner of that UPS, and that everybody who registered for this event was automatically entered into a draw. Now we have done that draw, and we've got our winner. I'm going to announce her shortly. I've already given it away. I said her, but drum roll. The winner is Chandra Stemmers of STP Brokers in the Western Cape. A huge congratulations to you. We will be in touch with you shortly. Right, so we have reached the last item on the agenda. We have got a guest speaker in store for you. I'm really excited for this talk. Now, he is a best-selling author and an international speaker, as well as host of the Single Wives show on Mnet. Justin Cohen is his name, and he has crafted a unique talk about a different kind of vaccine. I'm talking about a vaccine for the mind. Justin will be chatting to us about this, about how we can pivot our minds and transform our minds, especially in a year that has been challenging as 2020 has. So Justin Cohen, over to you.
Thank you so much. Yes, certainly it has been quite a year. Global economic pandemic, meltdowns, no more shaking hands. For some people that had to do with the virus. For others it was running out of toilet paper. All I knew was that having survived the 90s rave scene, I was not going to be felled by a virus named after a light beer. Well, we don't always recognize the importance of the work that you, our risk specialists, do, but I certainly believe that 2020 will go down in history as the year that we recognized the value of what it is that you do. It's usually only when the proverbial hits the fan that we get to see how important our risk assessment and protection is. So a big thank you to you for the work that you have been doing, and I hope that you see the tremendous value and purpose of what it is that you do. Well, yes, we have had a year, and we are all familiar with one virus. I'm here to tell you that there's another virus. You thought that I was coming here to fill your life with cheer and joy. The good news, there's a vaccine coming for the coronavirus, but I want to give you a vaccine for another kind of virus, which I think in some ways can even be more dangerous. And this is what I call the distress over virus. And this is the distress that we feel about corona and its impact. But the good news is there is right now an immediate vaccination for that virus. There are practical ways to build resilience, to find calm in the chaos. And I call this the 3P happiness vaccine. Why happiness? Because it turns out that happiness is actually just about the most powerful antidote that we have for distress. So this is a vaccine, not that I am going to inject into you, but you are going to be able to inject into your life. So 3 Ps. And your first P is when we go to the doctor, what does she almost invariably say? Have you been exercising? Have you been eating fruits and vegetables? And have you been getting your 8 hours of sleep? And we usually think that's got to do only with our bodies, but in fact, it's got as much to do with our minds, because of course, our minds are rooted in our brains and our brains are rooted in our bodies. So healthy body, healthy brain, healthy mind. And often when we are beleaguered with all these risks, with all these pressing issues on our time and our lives, we neglect those things. I had a friend say to me just yesterday, she's like, I just do not have time to exercise. I'm like totally frazzled. I got so much going on. I said, well, here's the thing. Actually, you don't have time not to exercise, because if you were exercising, you would actually find that you would be less frazzled. You would actually be able to work smarter and sharper. And I'm going to prove that to you with our first P. So the first P of your distress over virus vaccine is physiology. There are 3 Ps, and the first is physiology, right? We are physical beings, and we've got to look after ourselves physically. Now, when we think about our minds and emotion, we sometimes have the sense of something kind of ephemeral that just kind of happens or doesn't. But remember that these minds are rooted in our bodies. And if you really want to understand stress, distress, anxiety, well, physiology actually provides us some very powerful insights. And to really bring home these insights, we need to go back in time a little bit. We need to go back to, well, approximately 40, 50,000 years ago, just around the corner in cosmic terms, to our cavemen ancestors. Now, remember that our cavemen ancestors had the exact same brains as us. And those brains developed, evolved to deal with a very different environment, right? These guys had 2 things that they had to do to survive: fight or flight, or in my ancestors' case, flight, right? And in today's world, there may be no saber-toothed tiger, just a saber-toothed client, no death threat, just a dead lion, but the body responds to emotional and social threats as if they were physical threats, right? So when you're feeling distressed or anxious, adrenaline and cortisol are pumped into the body, raising heart rate, breathing, blood pressure. The blood is shunted to the muscles where it is needed to fight or flight. This emotional, biological, physiological chain reaction is known as the stress response. Now, very important, stress is not the baddie. Okay, stress is really important. Stress is just arousal. And if you've got no stress, no arousal, you're either dead or asleep. The problem is actually distress, right? That's when we have too much stress. Good stress, the stress that enables us to think and focus and solve problems and, even have fun, is known as eustress. So if you're ever feeling frazzled, unclear, you can't quite figure out what's going on and you start to get into anxiety, then you are in distress. Now I want to show you what this looks like. This is known as the Yerkes-Dodson curve, and it's going to show you the relationship between stress and our performance. So as you can see, I'm just going to expand this so you can see it nice and clearly. So remember, stress and arousal, it's just your energy level. That's on the x-axis. And then you've got performance, right? Any kind of, the kind of performance that we, not that our caveman ancestors do, but what we do, that sort of mental focus that we need to assess risk, to deal with risks, to focus, to sort things out, to solve problems, that's performance. Now, as you can see, increased arousal and stress actually increases performance, right? Makes sense, right? If you've got no energy, no arousal, you're just not very effective. Then you get to the top and notice what happens once we get to that optimum point of stress, energy, arousal. Thereon, performance actually goes down, right? And the more stress, the more performance goes down. Now, I think we can all recognize that in ourselves, right? When you're just so stressed where you cannot actually think clearly, right? So then we know we've got a problem. So what I'm going to give to you today, and this is going to be very practical, right? Because I want you to be able to put this into your life. I'm going to give you a really powerful way to deal with this. Now, think of stress as the accelerator, right? So we need to accelerate, but we've got too much accelerating, we start to break the engine, then we may need the brake, okay? So if we've got stress, which is the accelerator, what is the brake? The brake is relaxation. Now, it turns out relaxation is not just sitting in front of the TV with a bag of chips. Amazing, you actually can see quite high levels of stress sometimes when you're just kind of watching, particularly something on Facebook. Amazingly, people actually feel worse about themselves after social media. No surprise when you're on Facebook and seeing all these idealized versions of other people's lives, which quite frankly are very seldom true. So some of the things that we think are relaxing are not necessarily would be considered activating the relaxation response. So these are very specific physiological responses. The stress response actually activates the sympathetic nervous system, while the relaxation response activates the parasympathetic nervous system. So I'm going to show you how you can actually activate your parasympathetic nervous system. Another beautiful thing is when you do that, if we put you in a brain scan, we would actually see a shift of blood glucose energy from your lower brain to your high brain. Now, the brain is complex, but for our purposes, think of yourself as having two brains. You've got a lower brain. That's where you've got impulse, immediate activation. You've got your fight or flight response. Yeah, and it's very important. It was way more important by our caveman ancestors who were in continual threat, right? They lived a lot of their lives in their lower brain. In our world, where, yes, believe it or not, even with this virus, we live in the most unprecedented comfort and safety in the history of humankind. I will prove that to you a little bit later, but we don't need the same lower brain activation, right? So most of us are unnecessarily overstressed, right? And that stress is not actually helping us to perform. Now, the higher brain is what we call the prefrontal neocortex, and that's where we've got all higher order functioning, like problem solving, emotional control, mental focus, creativity, all the stuff that we need to actually deal with risk, to focus risk, to protect ourselves. You know, in the early days of the coronavirus, I was saying to people, guys, we got to, just put this into perspective. This is, the Spanish flu killed 50 million people. The coronavirus at this point has killed 1.2. I know we wish it killed no one, but let's just put it into perspective. And people say, no, you're underestimating this, and it's way more serious. And I wasn't disputing that it wasn't serious. I was just saying, look, when is the right time to panic? Never. Okay, to be fair, if you are being chased by a lion, panic, because that panic will get you moving, right? But if you are faced with the risks that we need to deal with, the risks we've heard about today, cyber risks and the risks of this epidemic, we actually need, it's not a lion coming right at us, we need our higher brains. We need to think this through clearly, right? That's how we can best deal with these risks, right? Not through this overreaction, which we tend to go into. So when you find yourself really stressed, what can you do, right? That's the important thing. What can you do? Down a shot. Why do we go for alcohol when we are stressed? So alcohol activates a chemical in the brain called GABA. And GABA is our brain's own natural relaxant. The problem with alcohol is that it relaxes the whole brain. That's why you often find yourself regretting what you did the day before, right? So obviously that's not the solution. And in fact, in the long term, the problem with alcohol, if you use it to medicate anxiety or distress, you actually get a rebound effect where you will feel better at first, but you'll often feel worse later. So what can you do in the moment? Breathe. And you're thinking, Justin, how did I live this long without you? Specifically, slow, deep, rhythmic belly breathing. Now, folks, remember we spoke about sympathetic nervous system, parasympathetic nervous system. This is really what we call our autonomic nervous system, which is automatic, and it controls heart rate and breathing and blood pressure, right? Which is what makes us feel stressed. Now, because it's automatic, we don't have control over every aspect of our heart rate and blood pressure, but we do have a key to control these things, and that key is our breathing. So if you want to shift your blood pressure, your heart rate, even your adrenaline, cortisol levels, you can actually do it with breathing, because it turns out that stress response breathing has a particular profile, and this is this shallow breathing, right? That, like, notice if you're anxious, you sort of start to breathe like this. Now that's very good if you're running away from a lion, not good if you want to focus on a decent risk assessment here, right? Then you need to be much calmer. So you will notice that when, in fact, I'm going to ask you to do this, and I'm going to really trust me on this, because I can't see you. So I don't know if you're doing this, but I promise you this is going to be worth it. I'm going to ask you to take off all your clothes. No, I'm not going to ask you to do that, but I wouldn't see you anyway, even if you did. I'm going to ask you to stand up, please. So just stand up, because this is really important. Okay, so just stand up. And I'll tell you why standing up is also so important, is because, listen, there's so many positive spin-offs, right? The upsides of down, right, of the coronavirus. Just look at us right now. We are able to connect. I don't know who invented the idea of social distancing. We are not socially distanced right now. We are physically distanced. We are socially connected, right? SHA has enabled us to connect, and we are connecting here today. The one downside, though, is when we sit down still all day long for Zoom meeting after Zoom meeting, we actually get depletion of a key chemical in the brain called serotonin. Now, serotonin plays a very important role in happiness. The reason we know this is because of drugs like Prozac and ecstasy. Popping Prozac makes you happy. Popping ecstasy makes you really happy. But these drugs don't actually give you anything that you don't have already. All they do is boost your body's own natural supply of serotonin. Now, guess what also boosts serotonin? Movement. Guess what depletes serotonin? Stagnation. If you sit still, we actually see depletions of serotonin. So when you just stand up right now, you're actually going to boost some serotonin. Besides boosting the oxygen into your brain, you're going to be more focused, more alive, but you're actually going to boost a bit of serotonin, okay? Rats who exercise on a treadmill for 90 minutes, don't ask me how they got them to do that, but they doubled their serotonin level. When depressed people go into a regular exercise program versus going on to Prozac, they get similar benefits. Admittedly, it's not always easy for a depressed person to exercise, but if they can, they will get virtually the same benefit from an antidepressant, because movement boosts serotonin. Okay, so that's why I'm really going to ask you to stand up. I really encourage you to do this. And in fact, I want you to just take that note that in your day, just be careful about finding yourself sitting still in Zoom after Zoom all day, because you're going to get depleted serotonin levels and you're not going to feel as good. Okay, so right now, stand up. Okay, good. Now, if you've taken a deep breath, you probably notice, and please breathe in deeply, that your shoulders go up. Now, this is stress response breathing. It's not a problem if you do one or two. In fact, it can actually, if you just do a few of those breaths, it can just get some oxygen into the brain. But if you're breathing like this all day, not good. You're going to be anxious. You're going to raise your heart rate, raise your blood pressure, and certainly raise your adrenaline levels. So what is relaxation response breathing? Folks, relaxation response breathing is belly breathing. And what happens is we breathe. So I'm going to ask you to put your hand on your tummy, like I am. Put your hand on your tummy. When you breathe in, the air is expanding your lungs into the deepest part, and your tummy actually goes out. So you breathe in, tummy goes out, breathe out, tummy goes in. Breathe in, tummy goes out, breathe out, tummy goes in. Beautiful. Now, if you didn't quite get it, when you lie down to go to sleep tonight, you will do this naturally anyway. So you just want to be conscious of that, right? That breathing is putting on the brake, okay? That breathing activates our parasympathetic nervous system, and you will actually shift from the low brain to the high brain. Please stay standing. I can't see you, but I trust you. This is important. I promise you, you're going to get great value out of this. Now, I'm going to show you, research shows us that if we do 3 slow, deep, rhythmic belly breaths, we will actually see these shift from low brain to higher brain and significantly reduce stress levels and distress. That's right. In the moment that you're feeling distressed, if you can just slow down your breathing and do these 3 slow, deep breaths. So we're going to do these 3 together. Put your hand on your tummy. Now, when you breathe in, there's actually a very slight stress response. And when we breathe out with me, you'll notice you actually feel a bit more relaxed, right? Because there's a subtle relaxation response on the out breath. Knowing that, we're going to extend the out breath, double the out breath, and that's going to further activate the relaxation response. And we're also going to do a little bit of self-hypnosis. As we breathe out, we're going to breathe out on the word calm to 4 beats, and that's how you're going to relax us even more. So I'm going to ask you to do this with me and close your eyes. So you don't have to close your eyes during the day. This will still work, but we get so much stimulation on the outside that if you ever want a quick de-stress, it is great to close the eyes, because that's going to cut out some of that extraneous stimulation. So we're going to do 3 slow, deep breaths together. Here we go. Breathing in on the count of 2. Out on ka, in on 2. Out on ka, in on 2. Out on ka, Good. How are you feeling? In fact, I'm going to ask you to put it into the chat if you do have access to the chat. I'd love to hear how that feels. Those of you who did it, I'm sure you would have found that those just 3 slow deep breaths would actually reduce your stress level and activate your relaxation. So simple. Now, what happens if you, and thank you, getting lots of comments coming in here, feeling better, soothing, awesome, beautiful, even feeling happier, feeling good. Thank you, guys. That's so cool. So nice that we get to be able to interact like this. And if you think this is even better than an audience, because you guys I wouldn't be able to see all these beautiful comments coming in. So thank you. That means a lot to me. And I feel like we're even more socially connected than we were before. Now, what happens? Let's say client calls you up. They absolutely enraged because their risk claim was not met in the way that they felt was fair. I know you never have clients like that. They're all calm and easygoing, and there's never any problem, and they're always happy and give you so much love and appreciation. Yeah. Maybe not. So what happens with that really tough client? You can't exactly say, now just hold on a second, I need to do my 3 slow deep breaths. Just hold on, I need to, just wait. You can't do that, right? So what you want to do is just slow down your breathing. So even if you don't do this whole technique that I just showed you, just slowing down the breathing, being a little conscious of it going, and folks, you are going to, and this is so powerful. You're going to see that suddenly you're not triggered. You're not losing your temper. Yeah. As I always like to say, when they lose their temper, don't lose it with them. Yeah. When they overreact, don't overreact to their overreaction. Right. Sometimes we've got to be the bigger person. This little technique helps you to be the bigger person. This little technique, what we say when we lose our temper, we lose our prefrontal neocortex. We lose our higher brain, right? This helps you to regain your higher brain. This helps you to regain your prefrontal neocortex. That's what makes us so incredibly powerful. I promise you, this turns you into an emotional superstar, because you're in control rather than being controlled by them, right? So you just slow down your brain, and suddenly you can see, hey, you know what? I don't need to take this personally. Difficult people are in pain, okay? And the issue is, guys, you're dealing with a lot of people who are in pain, because it's risks that they are now dealing with that have in fact come to fruition. In fact, it's not a risk, it's an actual threat, that it's a present threat. So you're dealing with a lot of people in a lot of pain. And so this helps you. I find when I do it, I don't take it as personally. I don't lash out back. Yeah. If an eye for an eye and the world would all be blind. Yeah. You punish someone, they punish you back. You harden someone, they're hard, it's like a boomerang. It comes right back at you. And so I find that this helps to just ease this out. Even in personal relationships, business relationships, slowing down the breathing helps me see more clearly, and I know it's going to work for you. So just slowing down that breath. Beautiful. And I see Leanne there saying, I breathe in so deeply through my nose that okay, I got it, Leanne. And in fact, breathing through the nose is really great because it also helps to slow down that breathing. Okay, good, guys. So your first key is physiology, right? So what can you do is, yes, the breath, slowing down the breath. There's something else you can do. If you aren't standing up, stand up. And if you are currently standing up, stay standing. I want you to stretch out your arms like this for me, please. Stretch them out. This is really important. Yeah, enjoy that as well. Have a good stretch. Right? That really helps to get the blood and oxygen really pumped through the brain and the body. Okay, now, Amy Cuddy is a professor at Harvard University, and she calls this a power pose. What Cuddy's found is that if you stand in a power pose for just 45 more minutes, just kidding, if you stand in a power pose for just 2 minutes, you'll actually boost your testosterone level by 8%. Ladies, don't worry. That is not the equivalent of a sex change operation. Testosterone is actually the chemical basis of confidence and dominance and energy and excitement. And you'll also reduce your cortisol level. That's a stress hormone implicated in weight retention by as much as 20%. So let's say you've got to go into an important meeting and you're not feeling so confident. Walking in like this is probably not the best thing to do. But if you actually stood in the bathroom beforehand, preferably lock the door, you then go out normally, research shows you'll be perceived as significantly more confident, even though they don't know you've been standing in the power pose. True story. Aristotle used to tell men going into war, if you don't feel courageous, act courageous because feeling will follow. I call it changing ourselves from the outside in. Folks, remember our first key is physiology. Well, guess what? One of the best ways to change your psychology is to change your physiology, right? If we're walking around frowning, slouched, drooping, to what extent do you think, you can conquer the world, right? How happy are you going to be if you're shuffling about, right? But suddenly, I want you to go with positive posture for me. What is positive posture? Positive posture is you lift your chin, smile. Now, there's a feedback loop in the brain. When we're happy, we smile. But guess what? When we smile, we actually feel happy, Botox reduces depression. True story. Not because you look in the mirror and say, oh, I've got no wrinkles, I'm so happy, but because you can't frown, and so you don't have that negative feedback, right, for negative emotion. Truly. Now, you don't need Botox, but just by smiling more, you are going to activate your psychology, right? So what's positive posture? Lift your chin, smile, stick out your chests. Ladies, don't hold back. And can you see the difference? We know in business, we always say hire for attitude, train for skills. Somebody's got great attitude, they'll acquire the skills. Somebody's got poor attitude, great skills, they'll be the first person to say, that's not my job. Guess what the word attitude means? The origin of the word attitude is posture, right? So if you want to lift your attitude, lift your posture, right? Notice the difference. Notice how that feels, And so that's why we want to be careful if through the day we're sitting behind that Zoom meeting and we're all crouched and we lowered serotonin, increased adrenaline, and negative posture, negative physiology, creating negative psychology, right? So if we stand up, get up, do a few power poses, move the body around, and that brings me to my third and final key to shifting our state with our physiology, folks. For those of you who don't do this, I'm afraid it's critical. Exercise. We think we just exercise for our body. No, we exercise for our minds. Remember that rats exercise on a treadmill double their serotonin level, but exercise does something else. Remember, distress is raised adrenaline, and adrenaline wants you to fight or flight. But in modern society, we don't have that opportunity, right? Our current world, it's not about the physically fittest and fastest and strongest, right? It's actually about those who can think and focus and create and strategize, right? And so we have all this adrenaline pumping through our bodies, compromising our mental focus. What does exercise do? Because if you are feeling distressed, you can't just get on the floor and start doing press-ups in front of your distressed clients, as entertaining as that might be. But by getting into a regular exercise program, what happens with exercise, it gives you a substitute fight or flight response. The adrenaline is absorbed, metabolized through the body, right? So it actually extricates that adrenaline. And that's after any physical workout, you're going to feel calmer. You're going to be less adrenalized, less cortisol. Folks, it's really, really important. See what I was saying? This friend of mine saying, I don't have time to exercise. I'm so frazzled. I got too much of. you've got to do that. That's why you're frazzled, right? Because you've got all this adrenaline and you're not getting it out of your body, okay? So make sure you do it. All right, good. That was your first P, and I know that I think we started a little bit late, so I've got just I think just a few more minutes here to go. Panelists, you can give me an update in terms of time, but let's get to our next P, because this is really important, particularly for the brokers here, okay? And number 2 is positivity. Positivity. So, yes, we're told this is the greatest global disaster since World War II. Well, I don't know about you, but I'd rather be here than in World War II. And what the brain does, because remember, our caveman brains were constantly dealing with threat, and they had to do 2 things besides fight and flight. They had to, number 1, get lunch, number 2, avoid being lunch. And if they failed at number 2, they'd never get to enjoy number 1 again. And so there's this algorithm, this fundamental algorithm underlying the human condition: overestimate threat. Because if you underestimate threat, you could die. Whereas if you overestimate a threat, well, you live another day. The problem is all that overestimating of threats, which is essentially negativity, constantly seeing what's wrong, what's bad with my country, with the business, with the economy, with the, right? You know, we get surrounded with that, is that we are constantly manufacturing threats. Why has Facebook become one of the most powerful companies in the world? Because it has an algorithm that essentially sells advertising, and that algorithm preferences negative news. That's why you see all this junk, fake, nonsense, conspiracy theory BS on Facebook, because that's how Facebook makes money, right? I don't say that, you know, they do that deliberately, but the algorithm just automatically kicks into what people want to watch. And it turns out that negative news activates far more of the brain than positive news. There's twice as many words in the English language to describe negative emotions as positive emotions. Even before Facebook, there was an expression in the news: if it bleeds, it leads, right? Because think about it, good news just doesn't sell, because to the caveman brain says, well, good things, you don't have to worry about them because they're good. You know, focus on the bad things, right? Think about it. You go up to somebody and you say, what's wrong? Yeah. You go up to somebody and say, what's right? You ever go, what's right? No, you don't go, what's right? Because the brain's like, don't worry about it. See, the brain doesn't really care about our happiness as much as it cares about our survival. Now, remember, I said to you, we're living in the most unprecedented comfort and safety in the history of humankind. And some of you probably think that I've been smoking something. Folks, just think about it. Our caveman ancestors, whose average lifespan was about 24, if they came to this earth, they would think they were in heaven. Food, if you were in middle class, food, shelter, healthcare, endless entertainments. They'd have one little weird question: why are these people so anxious? Right? Because it turns out that anxiety and distress has much less to do with what's going on out there and more to do with what's going on in here. So even though we live in this world that is, yes, this year tougher than it's been in a little while, because again, if this is the greatest global disaster since World War II, come on, look at this. Spanish flu killed 50 million people. Corona, 1.2 million. Yeah, I mean, let's just put this into perspective. You know, even crime, and I know, you know, you guys do the risk assessments, and thank you for that, because that's what's a beautiful thing. I love, I mean, insurance is such a bizarre thing that it's this grudge purchase. I mean, think of a world with no insurance. Like, you could never protect yourself, your family. If something happens to you, your things. I mean, this is one of the most ingenious inventions ever, right? And so, yes, you guys are faced with a lot of threat. You're constantly assessing threats, and you need to be a little careful with that. For your business, brilliant, and thank you for it. But for your mental health, what we want to do is not let that create the sense that we're living in this world that is just, it's so dangerous that in any minute we are likely to have something terrible happen to us. Of course, that can happen. That's why we have insurance, but much less likely. Let's take a moment and consider crime. So we know South Africa has one of the highest crime rates in the world. Yeah. So a lot of us think, oh, crime's the problem. It is a problem. Don't get me wrong. It is a problem. Our caveman ancestors had a 1 in 4 chance of being killed by another human being. 1 in 4. Guess what it is in South Africa? One of the highest crime rates in South Africa. It is 0.006%. Okay. 0.00, I beg your pardon, 0.0006%. Now, of course, we prefer it was 0%. But like, can you see what I mean about things getting better? Yeah. More longevity, less childhood mortality, lower poverty, right? But it doesn't feel like that. And that's because, okay, little news flash here, we have a negativity bias. So the brain locks onto the negative rather than the positive. Now we have got to actively cultivate positivity because it doesn't happen naturally, okay? And brokers, this is a critical message for you. So MetLife, one of the largest insurance companies in the world, had a problem shared by many of their competitors. They were losing half of their new recruits in the first year. These guys were getting so demotivated by all the rejection they were getting, because yes, insurance, I always say insurance sales is like New York. If you can make it there, you can make it anywhere, right? Because it's tough, right? And so these guys, they were recruited for their intelligence and their qualifications, and so they were great, sharp people, but they were getting so demoralized by the rejection that they were leaving. And MetLife were leaving $75 million a year in wasted hiring costs. $75 million a year. Enter Dr. Martin Seligman, the head of the American Psychological Association. Seligman comes in, he hypothesizes the star insurance salespeople be primarily optimists. What are optimists? Optimists are people who expect the best. They're quick to turn problems into opportunities. Should the optimist fall out of the window of a 40-story building, passing by the 20th, he'd say to himself, so far, so good. MetLife were a little skeptical, but they allowed Seligman to come on board. Amazingly, he found that the most optimistic brokers sold 56% more than their pessimistic counterparts. 56% more. Optimism was more important for success as a broker than intelligence, qualifications, or virtually anything else, right? So this is important for our sales. It's important for our happiness. It's important if we want to reduce these distress levels. We've got to be more positive and optimistic. How can you do that? Okay, again, remember I said it's going to give you tools. So, and I'm very mindful of my time here. So again, panelists, let me know how we're doing, but I want to just give some quick practical tool here. When you're faced with a challenge, whatever that is, health, physical, financial, in fact, if any of you want to do this, write it down right now for yourself and write down whatever challenge you're facing, whatever it is, write it down. If you're a broker and you just lost a big deal, so I do a lot of work with sales teams, right? So if you noticed that we need to be rejection specialists, it takes 12 exposures to a new product or service before people will buy. 12 exposures. Now do you see why the optimist win? The pessimist says, oh, they're never going to buy. The pessimist gives up. The optimist says, if I change my approach, get back and they keep on keeping on, there's a good chance I'll eventually get the deal. So the optimist stays engaged. Beautiful thing is we can all become more optimistic. And by the way, when I did the original optimistic psychometric, I came out as pessimistic. You know, I came from a family where, we just pretty much, we saw the big dark cloud instead of the silver lining. That was just kind of, the way we did. The glass was perennially half empty. And then through applying what I'm going to share with you right now, when I did it again years later, my optimism level was in the top 2%. So you can really shift this. Okay, so what can you do? You got a challenge, write it down, whatever it is. You got rejected by clients, a deal fell through, you got a health, whatever it is, right? Yeah, maybe it's even this corona. Whatever it is, you write it down. Okay, now the first question you ask yourself, and it's going to sound a little crazy, trust me, what is good about this? What is good about this? Because adversity is the way that life educates us. Because the greatest thing that ever happened to David was Goliath. Because if it takes 12 exposures to get a new client, well, if you heard a no, what's good about it? Good, I'm one step closer to getting a yes. Yeah. Sometimes just looking at how it could have been worse. Wow, look, this isn't quite the way that I wanted. We call this a counter negative, but it could have been a lot worse. As the Dalai Lama says, when you lose, don't lose the lesson. What can you learn from this? How can you grow from this? Look at this coronavirus. We are on track to get a vaccine in less than a year. Do you know the quickest we've ever developed a vaccine is 5 years. The technology that we've developed to do this is going to help us to deal way better with the next disease. Do you know that the vaccine we've developed is a very unique vaccine? It actually changes the DNA of the gene, and scientists believe we'll be able to use this as a cure for some cancers. Talk about what's good about it, that this corona could actually enable us to actually save lives. Yeah, so I want you to do this in your own life, whatever that challenge is, what is good about it. Now, I know that we need to get going. So number 2 is positivity. When bad things happen, look for the good in those things, right? When you lose, don't lose the lesson, right? Bill Gates, the biggest impediment to progress is success. Success makes us complacent. Failure is a teacher, a sage. Fail forward. Yeah, failure is just feedback. Yeah, fail forward. Fail fast and fail often, as they say in Silicon Valley, because that's how we learn and grow. 3rd and final P, and then I'm out of here, because right now, of course, they can't drag me out. Normally, they would have to do that, but panelists, I'm going to be closing up right now. Okay, so we got physiology with positivity. Folks, I'm going to leave you with the final one. Purpose. Purpose. I'm going to leave with one final story. The most inspiring organization I've ever had the privilege to work with, other than SHA, of course, is a company called Pep Stores. 20 years ago, they were nearly bankrupt. Today, they're the biggest single brand retailer in Africa. They've achieved double-digit growth every year for the past 19 years, other than in this year. And by the way, they achieved growth this year as well. Incredible. They actually continue to grow, even with locked stores. Ask them how they did it. They'll tell you it comes to one thing, your 3rd P, purpose. 20 years ago, you ask somebody at Pep, what do you do? They'd say, we sell clothing. Today, you ask somebody at Pep, what do you do? They'll say, we serve remarkable people who have to get by on a very small budget so that they and their families can live with dignity and pride, period. Once they got clear about their purpose, they were able to create school uniforms at a price that no one else can, but the quality of a much higher price product, because you can't give people cheap things that are going to fall apart and respect their pride. I met people at the shop floor level and senior executives that said, Justin, I know I could be earning more doing less at another company, but I choose to be at Pep because at Pep I know I make a difference. What's the difference between Pep and any other clothing retailer? Not a whole lot in what they're doing, but in how they're doing it. Pep's clear about the difference they're making. So what I want to leave with you on this, what we know is that purpose-driven people are a lot happier, they experience much less stress, and they're way more effective. How do you activate your inner purpose? Ask yourself, how are your clients going to be better off because of you? How those businesses are going to be better off because of you. We know in your risk assessment and protection, they're going to be massively better off. They're feeling that this year, but also you as a person, the attention, the care, the kindness, the love that you are going to give them. When you are clear that this is not just a job, this is a calling, this is about making a difference in your clients' lives, in their organizations, in this beautiful country of ours, that will activate your purpose. You become a missionary instead of a mercenary. And we know as missionary salespeople sell double the amount of mercenaries. Who do you want to deal with, a mercenary or missionary? Obviously, somebody who cares about you, somebody who's driven by purpose. You can activate that purpose by asking yourself, how are people and organizations going to be better off because of me? So on that note, I want to thank you, our risk specialists. This year was the year we saw your purpose. We saw the power of what you do. Know it, live it, and share it. Thank you.
Wow, wow, wow. Thank you so much, Justin. Your talk was both entertaining and informative. I certainly enjoyed it. I loved the breathing exercises, and I'm definitely feeling a lot more relaxed and ready to go into the weekend. And from the comments, it seems that our viewers have enjoyed it as well. So thank you so much for that. And we will continue with some of the tips that you've shared today. So we have come to the end of our session. Thank you so much to everybody that joined us today. We hope that you enjoyed it and that you find the session informative. As we have mentioned before, you can download a copy of the report from our website. You can go to the downloads tab, or you can scan it right now. The QR code is appearing right here on the screen, and you can download a copy that way as well. So thank you everybody for joining us, and enjoy the rest of your December, the rest of your weekend, and do stay safe. See you next time.